Yep, morning.
Yeah, very little volume. Really just gonna wait and see which way it breaks. So, hey, good morning, Jermaine, Happy Kid, DKS, Senor. Thank you. Good morning, Avila. So yesterday I went through and looked at this is extended hours just to see what was going on. Nothing happened. We basically haven't moved today. I've, I've been up for a little while. I was doing some other stuff, but this is nothing really noteworthy yet. Just everything's really flat. We're basically just along for the ride at this point. Not really sure what we'll see. This looks about right, except for the gap. GME is out of its. That's it. I don't know what to tell you. I mean, it could be a distribution, but that's it. I mean, it's out of its thing. I mean, I don't know. When I say it could be a distribution, I'm saying like it came up to the top again. So it's just kind of sitting on the top. And until we break above that, we don't really have like confirmation that this is going our way. And I would even say it's probably a better idea just to wait until 22 just to be sure, because these, I think if it pushes up above 22.20 here, you guys are like 22, we're already on 22. I meant 22.32, sorry, I'm looking at this line. I think if it pushes above 22.20, you probably move up here, but I'm going to say it's right here that we're going to see confirmation. So if we're going to see it, that's probably where it would be. And yeah, yesterday at close, there was a little bit of a spike on AMC, but GME had a major move, big volume, and it broke the creek. So I'm a little bit like perplexed because on the one hand, we were expecting maybe 2160, maybe 2109. Came to 2160. That's almost exactly where it found support. So I'm happy with that it didn't, break down further. That's great. I'm a little perplexed with this move being where it is because it was the tail end of the day, and I don't know, it's just really strange. It's just a really strange place to place it. So when you have a creek cross, enough is enough. So if it got across it, it's enough. I mean, we really probably don't need to sit here and just doubt it, and like I'm doubting it right now because I'm like, that was a really bizarre move. I just don't know what that would mean in terms of like backups, because like clearly it's above and it's pushed the resistance up a bit on that creek, which is important. That's what you want. My concern right now is that if it does have a backup, it's going to come back down really low. And yeah, I don't know how I feel about that. Maybe I don't need to feel any way about it, but I think that's the move out. It's pretty much one and done in terms of the trajectory stuff. Yeah, I don't know. I suppose I would place it back here. It's pretty far. So I'm just concerned about the idea of a backup here coming back below because of the massive jump with no check. It's okay. Like GME does that more often than like AMC does it in terms of like I don't want to say healthy move, but it does do that where it'll push away and just not quite ever come back. So I'm not sure. I am not sure. I guess we just have to wait it out. So I'm optimistic because it jumped the creek. I'm pessimistic, if you want to say that, because the way it happened was weird. And yeah, and it's kind of a strange position. It starts backing up all of a sudden. We're going to be in a pickle. So we really need that confirmation going forward. This move right here, this is a potential hook as well. That's another reason why I wasn't sure. So it came right up to here at $21, and that's right underneath this trend. So it hasn't actually recaptured the higher uptrend here. I mean, it just hasn't captured a lot of things. So there's a lot to sort of check off on GME. Otherwise, I would not be super bullish, although I'm happy to jump the creek. Yeah, there's really nothing to talk about on IWM aside from like a little gap up. It did find support on my level that I wanted, which is 204.85, but it's kind of a weak bounce. You could definitely see how that could come back through if it's not met with some buying volume. Happy with the overall look of the RSI right now. It looks okay. It's not too overdone. It's got plenty of upside room, so I think we could make that break up to 208. We're going to be in good shape, but we're just not there yet. So this was hypotheticals, these two little lines I drew. So one was, hey, if your wave doesn't make it, you head fake or whatever, you could head down for a like a spring locally. And really, even if you think that's not possible, it's definitely still a possibility. And I don't really feel like it would be a huge deal to come back to 202 and try to like push one more time below it. In the grand scheme of things, that's really the main support right now. So until we get above 207. And then our little AMC. So what this is down below, if you're looking at this and you're kind of like, what is that? It wasn't on the chart yesterday. It's not a complicated assumption here. So if there's a breakdown at 5, and we didn't do it, okay, we held over 5 yesterday. I mentioned before I left that was kind of the critical level. Like we might get a spring or something like that. This looks like a big move up to the top, potential backup, but it's also difficult to tell because these small ranges, it's just hard. And until you see it kind of break out, like there's certain kinds of bottoms that I like to see on AMC that are easier to read, but this is not exactly like that one. It's kind of awkward. So if this had come up higher than this one on the left side, so if it had come up to, and it did, 508 versus the previous little peak at 507, and then it came back below and found a higher support, I'd feel pretty bullish about it. It came back all the way back down to the bottom. Like it essentially went all the way back and into like the lowest part of this little local range. So probably your instinct in this is probably my instinct in this, which is just to keep it simple and not overthink it. It's just a widening right now, and until it breaks, I wouldn't put a lot of emphasis on any particular move up or down. So our breakout level is still going to be like 513, so that hasn't changed from yesterday. If it holds 5, it's decent. It's strong enough. If it loses 5, I wanted to see what would happen if it flushed the other way another time. That may seem completely backwards from what I've been saying, and it is, to some degree, completely backwards from what I've been saying. However, in the best interest of everybody, I think it's good to go ahead and look at potential for a flush the opposite way and what that would look like. I don't think we're not running because of selling. Does that make sense? Like it doesn't feel like, oh, we're not able to advance because of selling. That doesn't seem like the case. It seems like we're not advancing because the buyers don't want to advance yet. Like it seems like the operator's content to just pick up more shares here. I don't know what they're waiting for. Maybe they're waiting for a final flush, or maybe they're just waiting for news, or maybe they're waiting for a specific number of shares accumulated. Like I have no idea, but they're not really buying very much. And there's no this isn't like a scapegoat, by the way, when I say that. When we're just sitting here doing nothing and the volume is super low, it should not be assumed that the institutions are doing nothing at all. It's rather that they're not marking it up or down. So regardless of whether you think they're still buying or if they're still selling, they're not moving it from the center. They're not ready to go yet. They're waiting on something. And when I say that, I don't necessarily mean it's a human action, like there's a human being there that's going to click the go button necessarily. I mean, sometimes that's the case, probably in the case of like certain news, but I think that on the whole, we already know it's like these quantum computer algorithms and stuff like that that are running the market for the most part. And so they're probably waiting for some kind of a particular trigger to move, and or some kind of threshold or whatever, you know. And at this point, there's nothing really to say about it except that, you know, we made the advancement over the creek. We've managed to hold it so far. We've had some mild changes of character in terms of the move. We've had a retracement after that change of character, and ever since that retracement, we're just kind of sitting here. That was most of the day yesterday. And that's essentially like the summary for AMC right now. So they're sitting at 505, and that level at 503 is where you want to have support. And when we passed through it, we needed to come back and check it, and we did. So we went all the way up to 519 and 518 yesterday, came back down to that 504 level, and we were just sitting there. And now the question is, are we doing like a cat ear kind of business, where we're going to drop off, or are we going to break out? So what I wanted to do yesterday after I got off is I went and looked at the downside possibility and like what that would entail. These are your downward creeks. So there's definitely not, it's not out of the realm of possibility that we drop to like 464. Now you guys were like, what? Booksy, you said there was a change of character. How could you possibly drop again? Well, this is the better way to put this is all like, all of these are basically the second cat ear, right? So like we've come to a point at this point where we're finishing the iteration. I believe that to be true. But the finishing of that iteration doesn't necessarily mean you immediately go back up. So the difficult thing to kind of, it's a pill to swallow, but it's difficult, is, and I've been using this a lot lately because this is a really easy one to look at for iteration. You'll notice that the iterations end here in some ways. They end at the end of this. I've labeled it Mark 9 on my chart so that you can see it. I'm looking at the fractal from that I used. I call the master fractal. And in theory, like the iterations really don't end at the bottom. They end right here, right before the drop. Because the ups and downs, as you can see them, the pattern of, in terms of this like cat ear formation, all of that stuff kind of terminates here at the end, before the actual drop. And there's other things to it. I don't want to get into that like too much. There's like my brain is coming up with like a dozen things right now I could say about it because there's so much involved in this last little bit. The main point, the main takeaway that I was trying to get across was like, really when you come back down here in this example, and that's all it is an example, is that you come back to that original supply zone, that liquid center zone that we talk about. And my argument for AMC was we're already there. And we've been hanging our hat on it for quite a while, meaning that that level, and we already know what it is, it's that 45 marker. Really like both of that, both 485 and 5. Okay, if I were to pick like only two, I'd probably pick 504 and 485. Okay, and I would pick specifically 504 because I think it's slightly higher than 5, but whatever. Point being is those are the levels that we've largely had pushed down through, and ultimately if you look at the original drop in, like this is where that supply is. So it's at 5, and then again it's at 485. There's 2 marks here that I would use. So both of those are like fair game in terms of returning to center. And I think that you want to keep those in mind, those 2 levels as you exit. It's easy for me to think, and for you for that matter, I guess, it's easy for us to think like, well, it already went down there, Booksy, it went to 482, it hit the mark like perfectly. Why would we need to do it again? All I can tell you is that when you get to the end, it's not impossible that you just break out and go. Like, just like GME, okay? Where we stand right now could be a very good spot. We could be in a position of strength where we're about to advance. But just like GME, unfortunately, if you look at the potential for a backup here on GME and you look at the potential for a backup on AMC, they're both in like a really dangerous spot all the same, because if you immediately drop below either of these 2 prices, whether we go below 5 on AMC or whether we go below 21.75 on GME, both of those could give you some pretty serious sell-throughs, and you basically could be enduring a flush. So I'm not saying that I'm not bullish on the whole, and I'm also not saying that a flush would necessarily end in terminal downside. That's like this idea that you're just going to keep going. I think at this point a change of character is very unlikely unless you pass below like 430. Why is that number getting lower? Because the creek is getting lower, you know? And frankly, like, until you break out, there's really no precedent to say that you can't keep returning back, diving underneath the floor to get liquidity. I mean, there's just no reason to say that that couldn't happen. So even though I'm like, yeah, I think it's pretty much over, I think that the iterations are done, we still haven't made the move. So the idea of like a final drop is not something that I would put past us, because you guys are like, final drop? You said that in the last 2 drops. Yep. Yes, I have. You're absolutely right. I said it over here, and then it happened again. I didn't think this was going to be a final drop, though. I thought it would be more of like a dip. But I could definitely see how 460 would be a level that would be, you know, like someone would want to get to that level. Do I think that it makes sense in terms of this original sell down level? No, I don't. So just to argue like against myself, like, it doesn't make any sense in terms of like where I think those levels are, 485 and 5. It just doesn't make any sense. I think we're right where we need to be here, 485.5. We've been talking about 45 since the beginning of this range. I mean, we talked about 481 a lot early on. It morphed into 485. Nothing about that has changed. So do I think 460 is obviously like below that? Yes, of course it is. But just to be fair, like when we look at the new uptrend that's there, it's basically in line with 460. 465 has been a support throughout. 463 is what I've got marked, but that area has been acting as support frequently. You can see 1, 2, 3 big regions where we've met support there. It would make some sense in terms of a backup a retest, if this was some kind of a phase B support. And I mean, it doesn't even have to be like a perfect Wyckoff setup. It doesn't have to be that 465 back on July 24th was a phase B support. It doesn't matter. The point is once you've entered like the later portion of the range, those supports are very important. And if you look at this in terms of a spring with even an LPS or just a test, a retest, that would be an area you could argue that we didn't test. I don't know, you know, like there's a part of me that's very hesitant to say that, because we bought off of 466, 467 or whatever when we came up. So if I zoom in, you'll see it better. So we bought right off this marker. So in some ways, it's like we already pushed up and came back down to 464. So it makes me feel like it's a bit redundant. It's like, well, why would we go all the way back down there? But that's the way that the creeks are flying right now. So I have to just kind of keep that in mind as we go forward. So the original supports that I talked about, like the 491 and the 487 below us, are definitely still there. Those are not gone. And if you look at the downward momentum here, these creeks going down, those are pretty much in line with those two levels. So you have one at around the 480s, one at around 490s right there. So they're still in line with those levels in terms of, all right, well, we said those were possible places to catch. Yeah, they are. They're still there. But there is another one, and that's out here, down here at 463. And it's, yeah, the way I've got this drawn out, it looks like it would have to get there like now. But we'll see. Okay, we will see. So I'm hesitant to say that anything here is really great until we break out. And I'm kind of in the mindset that this has been a large part delay slash, I don't even know. Like, it's just a kind of like a mess, to be honest. It feels like with the lack of volume and everything, it just feels like a way of not moving. You know what I mean? So I named my thing Sidecar Circus because I feel like we're kind of running sidecar to everything right now, and we don't have any control. We never do, but it feels like there's nothing you can do now. You're just kind of strapped in, waiting for that move. We don't have it. We just do not have the confirmation. They're not giving it to us. Even in the midst of those change of character, I think that we interpreted that well enough, but you can't bank on that unless you've got the confirmation. So when we were running up yesterday, I was like, my gut was telling me that it just wasn't worth celebrating yet. Like, we just didn't have it yet. So I was pretty flat and bored yesterday for the most part because there wasn't enough, you know. It's like you could make that move, that's fine, but until you find that support and advance again, it needed to be there, and it just wasn't. So, not yet, anyways. I shouldn't say it's all lost. We don't know that. So, it's a bit frustrating. This is not a chart that I like to watch. I feel like it's finished. I feel like it's over. And we're just kind of waiting. And, yeah, I'm kind of annoyed myself because at this point, when I look back on this and I'm like, well, are they just changing their mind? Like, are they changing their mind and deciding they want to iterate again? Because I know that this is not the same. Like, I know it's not the same as the previous ones that came before it. And I know that there's been change, and it's not just because I measured some fancy lines out, you know what I mean? It's really not. It's it's this S curve, and it really bothers me because I'm like, well, it just seems like they didn't want to follow through with it. So if that's the case, you know, are they waiting for something else? And that could be an alternate change of character, like, hey, we're getting ready to take it up, but market's not ready to go for whatever reason, or the buyers aren't there. It's not strong enough. Who knows? Too many sellers. Really couldn't tell you. I could guess. I'm sure there'll be plenty of people out there who say, well, it's obvious it's got to be this rate cut thing, or it's obvious it's got to be the market, it's obvious it's got to be this. I don't know if it's obvious. I think that there is a precedence for AMC to run ahead, and we didn't participate in a lot of that run on IWM, you know. And we didn't participate in the second run on IWM, is what I mean to say. So I'm a little confused by that too. But just push comes to shove. If I were looking at this top right here and I was trying to determine what does this look like to me, it looks like localized distribution. Like, it definitely doesn't have the appearance of, if I'm just looking at the top. Okay, so just bear with me for 1 second if you guys are like, wait a minute, what? Well, just looking at the top, right? You have an S-curve that pushes up, great. But it barely came above the previous top because the previous top was so high. So they already pushed resistance, now they've pushed it again. Now we're back below and we're kind of retreating, we're going away from it. So if I were looking at this, again, just from like a helicopter point of view, like where we're at right now, and I'm just looking locally here and just saying, well, what do I think is going on? I mean, it looks like high volume pushes into tops. Like each of these high volume pushes is going up and then it just dies. And I'm happy that there's no massive sell-off afterwards. That I see as a positive. Like, well, the sellers aren't really doing a lot to take it down. It's more like buyers are just kind of stepping aside. But then again, I have to think about effort versus reward. And it's taking a lot more volume to push it up right now than it is apparently to take it back down. You know, so on the one hand, it's like, are we floating? Yeah, there's a little bit of buoyancy there. We're not really like dropping levels easily, which is nice. But we're doing massive retracements on like 1/10 the volume. I mean, it's just ridiculous. So I don't really know what to make of that. Like, there's an element of ascending accumulation that's happened previously, right before a big run. And it is like that, where you get these big buy-ins and then the volume basically evaporates. But you don't go back below creeks, and that's the critical point of it. It's like when you see those happen, the buy-ins will happen. I'm doing a little drawing right now, and you'll maybe push up for a bit, and then the next day you'll do it again, right? And this is kind of what it ends up looking like. And this is like an ascending version of, normally I look at this and be like, well, that doesn't look good. You know, it looks like U-shapes. But it's usually a little more like rounded on the bottoms like this. Sorry, I drew it a little wrong. Right, and this is like an ascending accumulation where it's going up and it's not dropping creeks. It's developing an uptrend, and then we talk about how it typically goes like really parabolic in the end, and then it forms out like a cat ear, and then da-da-da-da-da. And this is sort of what we usually see as like our main... this is kind of the operator's big thing, right? Their shtick is that final drop right here will be sort of the last hurrah, and then and it goes back to... But the thing is like on this little example that I'm drawing, like there's never a retracement back below creeks. And anytime I see that retracement back below creeks, I'm typically like pretty leery of it. Like, well, it shouldn't be doing that, you know? And so in the end, like you don't run until this like last big push up and you get back above the tops and all these other trends and stuff. This is the ascending accumulation as we see it right before a big move. Usually happens right after the spring. So how is that different from, excuse me, didn't mean to delete that. How is that different from like what we're experiencing now? Well, I mean, you can kind of tell there's some definite pushes here against those creeks. It's not really holding anything super well. Every time we've advanced, and even this one, which I didn't extend, was apparently resistance. Every time we've kind of extended here beyond, we've kind of come back to it, and we're really struggling. And the first move we made after that push came right back below, down to 503, and it just did not hold. I mean, it could have come to 503 later, but it didn't hold that creek. And so it just doesn't have that same appearance. Like if this is that verticality that you're looking for, you don't want to go back and drop below 504. I mean, you wouldn't want to do that. You would want to stay above here. So if this had built out yesterday higher, we'd be talking like very differently right now. Even if it were about to distribute down, I would be kind of bullish if it were higher up and it were holding above. But instead, we're kind of chopping right underneath it. We're making these little tiny up thrusts. And it looks to me like sellers are trying to drop the stock. That doesn't mean they're going to win. I'm just saying like that's what it looks like. you know, and it looks like we're about to try to drop pretty low. So I'm wondering if, again, maybe the reason we're not advancing immediately is either lack of buying or something, you know, I don't know. Lack of conviction in the move. Because this is starting to look more like a short, quickly trying to cover a position before a drop, or like, and then re-entering, you know, before a drop down. And it should not be thought of as, in my opinion, although there will be people who disagree, they should not. I would not think of this as like a change of macro character. That doesn't make sense, because again, we need to zoom out and look at the chart, big picture. Go to like the 2 or 4 hour and just check it out. And when you look at the 2 or 4 hour, it does not look, again, it does not look distributive to me. This is all like high up. All the drops low have been bought up, you know. The only concern that I have is that it continually is like hitting lower resistance. So that's like my main concern, is like it's pushing down, pushing down, pushing down, pushing down. It's not advanced yet. It needs to get back above 520. That's a big one, but 513 would be a great start. So it just looks like they're kind of pressing it down. They're trying to get to those low values. And then they could take advantage of the low volume to do that if it makes sense. So anyways, 491 area, 487, and then 465. I mean, I hate to be like that, because frankly, like Friday, yesterday, super bullish. Felt like we were really seeing those changes that we wanted to see, but I don't know what changed, but this did not. There's just there's no, what's the word, like stopping power. I think that's the word I'm looking for. And an operator is not going to allow it to drop back beneath a creek unless they intend for it to go low, like have a flush. Like that would have to be part of the design, or part of the goal, is to go for lower liquidity. So yeah, there's just not a precedence for it unless that's the goal. So unfortunately, you're going to hear a like slightly different tune until we get above that 513 and then 520. Hey man, happy to be wrong about it. And I told, I don't know if I said it quite as elegantly, I suppose, in the Discord. I was just kind of chatting about it last night, but I said that I thought that it could just be a flush. It's really hard to know, because the last few times have just been major flushes. And it would be easy enough to kind of drop this down low, you know, and try to flush it down. You guys are like, why would that be easy? Because you're just triggering sellers. It's not about the fact that there hasn't been volume. That's a big deal. But remember, when you move from the center, it's like you're triggering something, right? So if everybody thinks 5 is support and it drops 5, you're going to have a lot of stop losses. You're going to have a lot of sellers that are weak hands that are like, well, I'm out. You're going to have a lot of people who are entering short positions, you know, expecting it to drop further. So it doesn't really make any, you know, it's like them triggering buyers on the way up here. It's just a matter of just need to have the right kind of push at the right time, and it will domino. So yeah. So what would be the best case scenario here? Let's just go through that. Well, the best case is coming up, obviously, but I think the best case scenario locally would be maybe more like a double bottom kind of thing, but I would say probably more or less, I would call it a like a localized spring attempt. So that would be coming back to near that 490s area and just flushing down to like 491 maybe at lowest. And that could potentially give you enough push. There's a large support there around 496. So that might not be that big of a deal. We've still got the gap down low at 480s. I said yesterday And I stand by it. I said if the creek holds, then you don't go back. And I'll stand by that. And I know that sounds like an obvious thing to say. That's like saying, well, if we don't go below 5, we're definitely not going to get down to 480. I mean, of course, right? I breathe oxygen, you breathe oxygen. It's like, that's a really obvious statement to make. But what I meant by that yesterday was that if this isn't a change of character and it's advancing and it can hold support here, we would see that as evidence, right? We have to be able to witness it still. We can't just assume anything. If we see that as evidence, then I would assume that at that point you could make an inference or whatever you want to say. Estimation that, yeah, you probably wouldn't come back down, but that's not really been the case. So I could look at this locally and just kind of track. Yeah, I mean, it's hard to say. This isn't really holding much as a creek anyways. I would probably place it here. I really liked it where it was, though. I don't know. Yeah, I think I'm about right. Maybe like 495. So best case scenario is you get a little dip to 495. That's slightly below this 497 bottom from Monday. And that could be potentially just like a spring action, but it'd have to come right back up like immediately. And the way things are going, it makes me very hesitant to think that happens. I'm not a huge fan of catalysts because typically they're there when you need them. But in this case, no one's coming to rescue us. In the 9th hour, it seems that no one's here. Or the 11th hour. That's the saying, right? What happens in the 9th hour? I don't know. There's no apparent news on the horizon. Maybe there's some kind of report that comes out tomorrow or something, but I haven't really looked. I'd have to go look and see. Because I don't know what else there could be right now. Yep. Yeah, I'm reading through all this. What is a creek? I am new here. July PPI inflation falls to 2.2%, below expectation of 2.3. CPI is tomorrow. Oh, there you go. Dropping, recovering, dropping and recovering. Close the gap, put them on an SSR. Yeah, that's down at the 80s, 480s. Maybe. You might be right, Nicholas. It's hard to say. I think that's the argument. About 430, 460, those numbers have already been hit. And we would expect that to be... a support at this point. Yeah, some of you guys are asking about the same things. One more big drop. Look, I could say one more big drop all the time, and it would be easy enough to say it every time to get people's hopes up. At this point, this drop could produce a whole nother series of actions. So it would be a very difficult one to say like, well, that's it. Because the thing is like, while I do think that typically once you're finished iterating and you get to that quote unquote final cat ear, phase. That is true, but the thing is like watching anything go outward, and an iteration is the concept of a fractal that you have to understand. A fractal being the way that we see bars in the market, especially nowadays because of computerized trading. It sounds complicated. It's really pretty simple. It's basically a pattern that repeats in itself, the same pattern over and over again, infinitely, to an infinitesimal scale. I mean, it's not really like a new thing, even though people will see it more now because of the computerized trading. It's so much more mathematically perfect, so it ends up looking visually like more obvious. And that's why everybody and their grandma thinks that they've discovered the true fractal, because it's everywhere, right? You can see it everywhere. But the fact is, it's always been there, and that's just the nature of accumulation and distribution. They basically look like one is flipped on its head to the other. And if you think about waves and how there's little waves that are comprising bigger waves that are comprising bigger waves, and then you're starting to think, well, Elliott wave does that. Yeah, it does. It already talks about iterations. And that guy was developing stuff just like Wyckoff was developing stuff long before computerized trading was like the big thing. And you got to talk about how that's just the nature of the market. It's like ups and downs, super straightforward. It's very binary in some ways. And the ups look a certain way, and the downs look a certain way, and then the tops look a certain way, and the bottoms look a certain way. That's the whole reason we have technical analysis. So the concept of that repeating on multiple time frames makes perfect sense. You can't have a big, gigantic wave that's like perfectly in line, on a big time frame. If you look close, you'll see smaller waves, right, within that wave, and then you'll see smaller waves within that wave. So naturally, you're going to see that iteration, as we call it. What's fascinating about the markets nowadays is that sometimes we can see that almost like religiously. Like it's like basically it's so obvious that it kind of hurts, because you're like, well, it doesn't look human at all. And this is an example of that right here, where you see that repetition of form over and over and over again. And I've just made it a point to kind of study those things and talk about them. And somebody asked me about the creek because they said they were new. And this is why I often repeat myself on the channel, because I know there's always newer people. The idea of a creek is just as simple as resistance and support. But what the difference with a creek is that a creek can be, like, a creek is kind of flexible. So this is an older creek because it's something we've already passed above, and currently it's acting as support. So this kind of middle range here, I drew a line from roughly that June 7th top through the kind of the middle on Friday the 5th, and that's where that whip around happens. And that's been a pretty adequate creek for now, especially the lower one right here. I think that one's really good. So what that shows you is it shows you where the resistance is. So the analogy of a creek is a good analogy because you can talk about jumping a creek, right? Takes you back to your childhood, unless you're just a wild man who likes to run around in the forest. You basically jump over the creek in order to get to the other side, right? And then it's a resistance. So it's something that's an obstacle that stands in your way. In the case of like AMC, for example, right now, there's one major creek. And so what I do is I use wave analysis. I use a lot of wave analysis. So right now, this is kind of like the major jump, right? So you see this big M that I drew on the chart, that is the major jump. And then this will be your big creek that you jumped. And it's evidenced by where those resistances are, here, here, where the supports are, here, here, and here. So this isn't like me just doodling lines, all right? There's actual evidence that that's probably where it is, and that's what I call a cross. So a cross is one that, like, we've already jumped. We've crossed the creek, we've jumped it. Don't know if you'll find that anywhere else in the market. That's just me, the way I talk about it, because it's easy to remember because a cross says what it is. It's like we've already crossed it. We've done this a lot. So you jump creeks all the time. Sometimes they just look like trends. Sometimes they're just downtrends, right? So like in the case of this one, this is really steep. So I'm looking back at June and there's a really steep creek here. That's just a trend. And that would be like a way of understanding. The trend line is an easy way to understand like a creek in this case, because it's like, well, it was coming down. It went a little parabolic. And then when it jumped it, it had a reversal action. And that's typically what you see. But it's more complicated than that when we talk about creeks, because creeks can also be, again, somewhat flexible. So like right now, if you look at all of the highs that we've had, right, you would say that the creek has been raised at least once here. So first we had the two highs coming down, and I'm not even going to be able to draw it. This is kind of the way it goes though, is that it came all the way down, and then I would say that this line is essentially that first creek jump. But it raised the creek, it pushed it up pretty high. So then you find resistance at 475. Okay? So at that point, your creek is now like really higher up. And it's flexible. It doesn't have to be like perfect either. It doesn't have to match wicks or anything like that. It's just like that's where you're finding resistance, correct? And I think we would all agree, yeah, that was where we were finding resistance. This was an advancement, an early advancement to try to push that resistance that failed. And they use that sometimes to create what I call a flush, which is just a giant sell through or a giant sell up. Maybe it's a up thrust, maybe it's a down thrust. But they push through that creek right there, and then it creates this kind of whipsaw where sellers like dump on it, right? Because they don't want to jump the creek yet. And so anyways, does that raise the creek? Maybe a little bit. You know, it's possible. So it's kind of like EMAs at that point, but they're not always one-to-one. So now the creek is a little higher, but it's not much higher. And you can see that ever since that move, it's been pushed up. It's basically falling into line with a parallel, essentially. It's almost like the purpose of that is to kind of get it more structured. So now it just looks like a parallel to this. And I've got this white line here. That's basically my representation of a creek, essentially. And that parallel, essentially that downtrend, is what's happening on the opposite side of this big creek jump. So they jumped the creek, and then ever since then, I'm not going to do it perfectly, but we've just been like chopping here, right? You can see why coming down at that point makes sense, because you're like, well, remember, the whole point of this was to, in some ways, was to try to find a way to move forward or to move down, move up or move down. You're never just going sideways for just the sideways sake. You know, it's building a cause, right? Either sellers are accumulating or buyers are accumulating, maybe a little bit of both, but they want to go somewhere. Well, I made the argument that what we're doing is we're kind of coming around and building a support above 486. And my argument was that when we started, we pushed really low, we used it as resistance, and then we've been building up on top of it ever since. So they're using this to kind of build a foundation right now between 5 and 480, and they're diving below for liquidity. And it seems that it's been acting more bullish to me. It's been having a lot more bullish action, which is that every time it dives low, it gets bought back up. And then we trade high, and then dives low, bought back up, trade high. Much more common in an accumulation than a distribution. If this were flipped, I'd be saying the opposite thing. If we were trading really low and up thrusting, trading really low and up thrusting, we'd probably be heading up. So this to me looks like a dive low for liquidity, because we're literally heading back down. We're like pushing down into this floor. We're making those dives, right? The problem is that when we talk about iterations, they can, to some degree, be measured. And I did do that. And I think they were done on Friday. And I think that means that what results is the final kind of moves here. The problem is that, again, you can't assume that just because the iterations are done that there can't be like another downward move, which is evidenced by like a final dip for liquidity. The only real argument that I was making about this one is that this actually comes back to the creek, which is true, but it also meets with that selling drop off in the beginning. And that makes sense because you're building out the waves, right, to come back above. And if you look at the major wave on this doodle that I've got here, excuse me, for the master fractal, that's the purpose of it. It's like resistance is here. We're working out, we're pushing up higher, we're working higher lows, then we're pushing up higher, and then we're coming all the way back down. And once we confirm it as support again, now it's not a threat. Now it's, instead of our supply level, it's support level. Very classic accumulation. And you do not have to look at me or look at this master fractal. If you don't have it on access to it, or you don't even know where to, just go back to the previous example, like right here. It's the same exact thing. Let's go back to May. That move from April into May does the same thing. It sets up like a sell down level around like 290s. It confirms that it's resistance, then it breaks it again, and then it comes back to test it, and eventually provides that, yeah, that level is actually support, and then it advances. The same concept. So my big concern right now with what we're doing is that we're not, I'm not really sure exactly why we're doing what we're doing, like in terms of like the height of this. I think it's to avoid a breakout. I suppose that's all I've been trying to say all morning, right? It's like we're just not, no one's ready to pull the trigger yet, so you're just avoiding a breakout. So the lack of follow through, the lack of stopping power has kept us pinned, and we're just chopping for weeks here because there's just no desire, I guess, at this point. Because it would have been feasible. Like I would have been totally on board with it had we hit 480. It would have made sense to me. If we had hit 482, moved up to the top here, pushed to like 430s, and then came back, retested, and then went. So I'm starting to think it's going to end up being a little bit like May, where we're going to have some kind of a dumb, massive gap at some point, one way or the other. And probably today, we don't see a whole lot. If we're waiting for CPI, I'm going to just go ahead and throw it out there that we're probably going to get some kind of a silly gap move again. And it'll be some kind of a race in the morning. I don't like trying to predict gaps because I think those are kind of silly. You're kind of you're assuming that there's going to be some massive move in a time when you can't trade. You really you're not paying attention usually, and there's not full market participants. So it's purely institutional, almost entirely institutional driven. So all I'm doing right now is I'm trying to take a look at where are some previous like supports and what angle do they have. This is how I do creeks sometimes, just to kind of get an idea of like where those intersections are. I can see one being right here, pretty decent one, right here at like that 460s area. So that's where I'm at with that right now. It's not so much that I'm like, oh, it's got to do this or it's got to do that. But if we did do a liquidity dive, it would not at all surprise me to be heading towards that region again, just like we did before. But it would be in the case of like in our case right now, it would be basically just for liquidity. And I don't want to say to kill time, but to some degree, yeah. If you've got the time to do it and you have the power to do it and you're an institution, if you're not marking up, you're marking down. Well, that's true at the end of the day. But if you're not going to mark up yet, you either holding pattern or you go ahead and do some nosedives for liquidity. So if the opposite were happening, I'd be a little more concerned, obviously any kind of flush to the upside with a massive sell down. And that's kind of what we saw yesterday. It's just really weak. There's not much to it. So locally, this looks kind of distributive to me. But on the whole, I could see this going either way. Yeah, it's kind of just there for the taking. If an operator wants to get it. There's plenty of supports down here. it would not necessarily be capitulation at this point. So a drop to, fill that gap at 480, or a drop to, I'm trying to simplify the chart, or a drop to the 460s or something would not be surprising. Some of y'all are like, you have no faith, Booksy. Hey man, look, I like to just read the chart as it is. And if there's an element of distribution in there, like I'm going to tell you that there's an element of distribution in there. So this right here does not bode well to me. I'm like trying to be as clear as I can as to why that is. I'm not saying it couldn't be bullish in the end. There's always the possibility that this is like, again, I drew it earlier, just deleted it. There's always a possibility if this could advance back above, find support at, 504. I keep saying 503, but it's really like 504 at this point. Yeah, I mean, there's a possibility. It's just got to make certain moves in order for me to know, like, yeah, that's the direction we're going. But right now, all I see is an attempted jump of a creek at 504, big up thrust, and then a sell back down that's kind of testing that creek. And so far, so good. It hasn't dropped it. You can see that big white line I've got. I didn't change that. I'm not telling you it's dropped it. It hasn't dropped it. What I am saying is that it's not really doing a great job in terms of stopping power. Like, seems like there's a lot of effort being put into the bull side. We're getting like big, heavy buy-ins, and we're not getting really heavy sell-offs, which is good. But they're taking it down pretty easily. And I'm not seeing buyers stepping in just yet. So nothing here reeks of like a smart money markup phase. Not yet. Almost. Maybe a final drop here does give us that oomph. And in some ways, I'd prefer to leave from that position. I know it sounds weird, but I feel a lot more comfortable coming into a bottom like hardcore fast and then just ripping and not stopping. As opposed to just like lollygagging sideways and then trying to advance. If you look at most of AMC's runs, they end with some kind of a dip right before the big move. There's very rarely like a flat sideways period. Like almost exclusively, there's always some kind of a quote unquote final drop, because you're doing a last pull down before that kind of slingshot out, and that's normal. So maybe we're doing that now, but it's really bizarre looking. So throw your hands up. Give up, Booksy. Why are you even here, man? You're not going to chart? I will chart. Don't worry. I'm not giving up. I'm telling you that I'm trying to do my best to mentally prepare for the possibility of downside. If it doesn't happen, we will see the build out as follows. It will go up past the top here, probably in this little pocket at 508, find support, and then it has to go above 513. That's a big one. But there's so many levels now that have to be checkboxed. If you're just looking for one, it's support above 520 right now, which is not far away. But considering we're moving like pennies every hour, it feels like a really far distance. And your smart money could take it up. No doubt they could. The other thing here is that so part of that ascending accumulation we talked about is giving people the opportunity to sell off weekends, but also the shorts to load up. So that when you do take off, there's an element of the short squeeze there, which is that your shorts are like, oh crap, we're scrambling to the door. They're going to help offset the cost of marking up for the operators. So imagine giving yourself like a surety of buyers. Like, that there's a lot of buyers there, right? But with the short sellers, you have more surety. Like they're definitely going to be buying back. You know what I mean? You don't know for a fact that retail will show up. Of course they will, but with FOMO they will. But I would say that retail tends to show up late to the party. So if I'm an operator, I don't know exactly how it works, but I would probably say that what they're assuming is that retail is going to be there for the last 1/2 to 2/3 of the move, maybe the last half the move, maybe retail FOMO's in, because retail tends to FOMO at the top because we're dumb, and that's why they call us dumb money. And they're selling and we're buying, right? And we're buying because we think it's going to keep going to the moon, and they're already selling off, getting ready for this distribution cycle. That's very normal. If that offends you, I'm sorry that offends you, but that's the way that they trade. So when you look at that, and then you think about, well, who's moving the early part of the move? That's the smart money buy-in. Like, that's where the institutions are putting like millions and millions and millions into every percent move. And that's where the shorts are starting to scramble and get out. And I think there's a lot of retail buying there, don't get me wrong. But I think predominantly it's like institutions are now, they're signaled like, oh, it's time to go. We're going to go now. And they start the markup phase. I think it's a lot like a roller coaster. Once the momentum starts, they don't have to do as much. They just got to keep the momentum going. It's harder to get started. Once you get started, your wheels start rolling. It's easy enough to just hit the gas every now and then, and it's like cruise control. So it takes a lot more energy to get the move going, but once it starts going, it's a lot easier. And I did a interesting mathematical calculation maybe 2 years ago now, where I looked at all the major moves going from the two big ones in 2020, 21, and then also the ones in 2022, the March and August runs. And it was fascinating to me because what I found was that I want to say it was like 6.8 million was the number. I hope I haven't forgot it, but it was very concise. They all look kind of different. They all look like they have completely different volume in some ways. But if you look at move volume per percentage, they actually averaged out to being almost all exactly the same, which is like, it costs like 6.8 million per 1% move. That's how much volume you see in each of those single percentages on average. And it didn't matter how high we went. It was the exact same number every time. So there's an exact science to it in terms of like what the cost is. And I think they're always trying to get to that sweet spot. Now this last big run up, I never did, but it's got monumental volume and it's probably not even close to the same. But I thought that was really interesting when I did that a couple years ago. I was like, so it really doesn't make any difference where we are, what we're doing. They're trying to hit a specific, that's like really specific, right? And it was like 1.82, 1.84, 1.81. I mean, it wasn't even like remotely off. Or 6.82, 6.84, sorry. Whatever it was. So I was like, man, that's crazy that like, it's so exact, that it's like they're trying to, or maybe they're operating under some kind of a mathematical certainty that like they don't have to spend X amount per percent, more than X amount per percent. Once they achieve that, then they can mark it up however far they want. But what was amazing to me about that was that there was no discrepancy in the size of the move. That's what really surprised me. It didn't make any difference, the size of the move. And that's another thing that goes back to like Wyckoff, the idea of cause and effect and building a cause and how that takes more time. So like the bigger moves do have a longer period of time before them, which is of course naturally the way you would see the market anyways. But like that's the way that a lot of Wyckoff traders operate, because they use point and figure charts and they count how long the move is to see what the cause built up is, to see how far you can go. And I think that number that I got, it's just a number. It's just an average. I don't remember exactly how I did it. I'd have to go way, way back and look, because I did calculate quite a bit of different things to it. It wasn't just a simple division. But I tried my best to like kind of make it a little bit more holistic, and it was pretty interesting, that they were all the same. So the cost for them doesn't change. Maybe they're trying to achieve that particular goal every time. And then they're just building up the cause for how far they want to go.
My old card, it was in that bag. I put it in the wrong bag.
The one you chucked into a bag?
Yeah.
Are you sure that's the old one?
It's the old one because it's the old number.
All right, just make sure. All right, this looks really good on GME. This is going into confirmation zone. Happy with this. So it looks like GME made a little move here. It's 2%, but that's a big volume move. It's heading up to that top. Guys, it's above the creek, so anything like pushing here could potentially be a fire starter. This is not back down here. I'm like hesitant to say anything's going to explode because it hasn't jumped the creek yet. There's always that wall. This is different. This is like over the creek. So we are in a really good position right now if we can hold a support above 2230. We're just approaching it right now. This is the floor. So if you're wondering like why I even marked that off, when you have a spring, in order to have a spring, you have to have like a floor, right? You can't just have a spring if there's no bottom because that doesn't make any sense. The whole definition of a spring requires that there already be an established floor that you're driving below. And I believe that it's at 2233. I think it's this low we hit back here. So everything that happened beneath that, and then really down here around 2050 as well, but that goes without saying. There's two major spots, right? And those are the two that I picked. So I'm going to stick with that. I think this is the floor. So I think if you want to see this break out, really explode, you're going to see that confirmation above 2230s, push out above here, come back down, confirm it. And then at that point, that's called a test, where you're testing the floor. At that point, it should be free. I mean, it should just start marking back to the top of the range if it's a successful spring. If this is an LSPY, which is the last point of supply, and it's really just a fake out, this is where it's going to happen, you know, at the end. It's going to happen right at the creek edge or right at the floor bottom. So we're right in that spot. It's a very critical moment for GME. And yes, you heard me right. I'm saying I think if it comes above 2230s and it can hold support up here in this confirmation zone, we should just move right back to center range and then right back to the top of the range. So I think we're going to move right back to the 2560s. So this is like the first place. We have confirmation. I've got this arrow here. I've got one more here at 2360, but that one's just sort of like an early support. So if you had like a Wyckoff, you would have two supports. One's kind of early on the auto reaction, and the other one would be like a phase B bottom kind of thing, basically like a later support. Those are the two that I marked off when we came up. And then naturally, like this place at 2250 was the prelim, so it's essentially like an early supply. And that's where it found support at 2050. So those levels are pretty critical. All right, the ones I just labeled, like spat out, 2050, 2230, 2360, 2570, and then at the top, 30. Love you.
Love you.
Those are the levels that I would look at. So to me, this area would be of utmost importance, and I think you're going to get that 50-50 layup, kind of like what I did with the drawing here, but yeah, there should be a move that's roughly 15 to 20%, and then another move that's more like 20 to 25%. And that's it. You would not spend a lot of time if this is bullish, okay, and that's a big if, but if ultimately at the end of the day, if this is bullish, you're not going to spend a lot of time going back from 20 to 30 all the way up to 30. Why? Because you already traded it. That's why phase C and going into phase D and stuff like that, Wyckoff is so fast. And it's not just because somebody looked at it and said, oh, look, it moves faster, we'll just doodle it that way. It's because there's a precedence for it, which is that you've already traded the range. And if you're ready to mark up, you just go back to the top and leave the range. You're not going to go back through and reach and trade again. That part is done. A spring doesn't happen in the middle of the range per se. It happens at the end. And same with like an up thrust. So yeah, I mean, say what you want about it. It's got potential here. And I know that I didn't get it quite right with how low I thought it was going to go. I thought 2050 was going to be the lowest spot it went. Did it end up proving to be an important support area? Yeah. But it ultimately came much lower. And there were people that were saying like 17s and 15s and 10 and 9. And I didn't agree with them on that. But I definitely didn't say like, oh, I think it's going to come to 1880. Like, I didn't say that. I thought it was going to go to 2050 and probably stop there. Once we got there, I remember thinking, like, that day that it didn't look like a bottom. But I was like, well, it bounced at 2050, but this doesn't really look like it's finished. I was kind of worried it was going to drop. I would never have expected it to drop as low as it did. That one day that the market, like, tanked. That was just something I couldn't have predicted on my part. I'm trying not to beat myself up too much about that, but I was like, yeah, I don't know. It was a crazy drop. But I did say that when we were coming down that I thought this was iterative. It looks like an S-curve. It looks like it's chopping and doing the same thing over and over again. And to me, it looks like a classic terminal action that's going to form a spring and try to rebound. So I felt pretty confident when we were coming down that it was still really bullish. So I just want you guys to know, like, I've not really changed my tune on GME. The only thing that people don't like about GME with me, and I'm sure that I hear it and people are probably like not always sure why I'm not as bullish as others, but the only thing I don't really think a lot of folks may not like this is that I kind of feel like there's a strong chance that we reject here between 33 and 37. That it may not go as high as everyone wants it to go right now. And that falls more in line with the sort of the principles of what's the word? Like, I guess the word that I'm looking for is like, forget it. I don't even care anymore. I lost my train of thought. Doesn't matter. Sorry. I don't know what happened. I was thinking about something. I was looking at something else. And then I was like, you know what? I should just give up on that because it's probably not going to matter anyways. So whatever I was about to say probably wasn't that important if I forgot about it within like 2 seconds. Right? It's so goofy. So I haven't changed my tune on GME. I still think it's got the potential to get way back up here. And it's not that complicated. I make it look complicated. These are just crosses and creeks. That's all they are. The blue and the yellow are crosses. The pink and the purple are kind of creek supports top and below. That's all it is. This one's more of just like for me, just to remember where that center mark may be. So, yep. That's it. So we're going to wait. I know you guys get really excited every time it gets green, but I'm not going to be super, super stoked until we get that confirmation. So just breathe and relax, guys. Breathe and relax. We need support. Definitely want support here. This looks like a head fake on AMC. It's a massive wick up and then a drop. Full throwback. I don't know, man. AMC just does not feel like it's doing what I want it to do right now. I might be the same way for the next day if it keeps doing this. So if you're already annoyed with me, I apologize. But I'm annoyed with AMC, so that looks like a 4 top. 1, 2, 3, 4. So 4 rejections off of 506 here. I'm going to mark this one down, because that's pretty important. 4 rejections off 506. So we'll want to see it come back above 506 for sure. For sure. For sure. Let's do the TA, Booksy. All right. Let's do the TA. Well, this stuff's kind of done. I'm going to use this to lighten the mood as I lighten the lines. Be endlessly positive, Booksy. Do it. That's why I got let go from my last job. I wasn't positive. I don't know why that makes me laugh now. I'm like thinking about it. I'm like, basically got fired because I wasn't happy all the time. It was just goofy, like a goofy reason to get fired. That's what you get. Jeez. Unrealistic expectations of people, man. Cracks me up. I mean, I don't want to be moody and despairing all the time either, but it's hard to be happy all the time if you're not naturally disposed to that, or you weren't nurtured in that environment. This is hard. My favorite 90s TV show? Oh man, that's hard. That's hard to do. I get confused because my parents didn't really like us watching a lot of TV growing up, so I would get like an hour or a half hour every day, and that was it. Maybe like Saturday morning cartoons, probably my favorite thing. When I was younger, I liked Saturday morning cartoons. You watch all the kids ones when I was little, and then I try to wait a little bit and watch like the older kid cartoons. But when I did get older and I had more access to like TV and stuff, I really didn't have any strong access to TV until like college. I know that sounds weird. I watched a lot of movies. We had a lot of movies at home, like VHS and stuff. But yeah, I was joking about it yesterday or whatever, the TGIF. Those are the kind of things like we would watch, but like I didn't really watch like TV very much till I was a little older. And I remember watching like Adult Swim on Cartoon Network and stuff like that. Like that was when like anime was still kind of like underground. If you liked anime, you were like weird, and I guess you're still weird if you liked anime, but At that point, it was like not as huge of a cultural thing as it is now. Now it's like every kid and their grandma watches anime. Younger people, I mean. But when I was younger, it was like, you know, if you liked anime and trans music, you were like avant-garde, you know, but super nerdy. You might as well have also been a band geek and an art geek and whatever. I'm sure it's always been a thing. Anywho, point is, I didn't really watch a lot of TV shows, so it's hard for me to pick a favorite. And then sometimes I'll pick something, and then I'm like, well, that was really 2000s, you know. I'd have to see like a list of 90s TV shows or something. I get mixed up. Because I liked watching, like when I was real young, like Transformers and Teenage Mutant Ninja Turtles. That was kind of my era of kiddom. They would show reruns of like Thundercats and stuff too. He-Man. But like that kind of stuff probably wasn't, I wouldn't consider it like my favorite TV shows of the 90s just because like later, you know, I had different taste growing up a bit, so hard to say. I was kind of a dweeb, I guess. I don't know. I still kind of am, right? Kind of nerdy. You know what's weird is like, and I love my wife to death. Like I love her so much, and she's definitely the best person for me. But like that, there was a girl in high school who was like considered like the most popular, you know, one of the most popular girls, and you know, I of course had this like huge crush on her. But I was always too like shy at that point. I would never talk to people, and I would talk to her occasionally, like just if we were in class. But what's amazing is like those inhibitions that you have when you're a younger person, they just kind of go away when you're older. And I actually this was before I met my wife. This was in like college or something. I went and like talked to her, and I was like, she's really like pretty cool. Like she was a pretty relaxed person, and we actually had a lot of common. And it was like just one of those things where like when you're younger, you think that you're such a dork, you know, all the time. And it's really not that much difference between people. I just think about that. I don't know why. I just brought that to my mind, like, because we were talking about 90s TV shows. I mean, aside from some of the stuff that you might be interested in, like, people are just people. And then I end up hanging out with people that are, like, super into, like, sports and football and stuff when I got older. I was like, I'm not really that into sports and football and stuff. But I actually really get along with some of these people, you know. It's funny how stupid you are when you're young. You think that there's the unbreachable gaps or something. And then to some degree that stuff still continues. And you know why we know it continues? Because of Congress. Boom. Congress is like middle school. The way they take jabs at each other. Throw rocks from behind their podiums. I'm just joking. We know that's supposed to be more constructive debates. I didn't see any kind of debate. Was there a debate or a interview last night with Trump and Kamala? I can't even remember. I thought that was like in the news. You still see that kind of clickiness in politics. You're a tall, thin male. I am pretty lean. I wish I was not as lean, but can't do anything about it. Yeah, but you don't have, like, when you're younger, you don't have good self-image, or a lot of people don't. I didn't have good self-image either. So you assume that you're not because you're kind of like dorky or quiet or whatever, you assume you're not really attractive or that you don't have anything to offer certain people or whatever. It's just a bunch of self-esteem issues. But I'm like comfortably average looking. I think that's the way to describe it. So like, that's a good place to be. I don't know. We're judging people based on the way they look now. That's what we're doing, Booksy. This stream has dissolved into just gossip and shallow, superficial things. None of that matters if you've got a good heart and you're kind. If you're a single person, just remember that. You'll find somebody that appreciates it one day. Somebody that's also kind-hearted and got a good heart. I can't give you financial advice, but I can give you love advice. I'm just joking. I'm not qualified for that either. Don't even get me started. I'm just kidding. We're just running with it because look, literally we're sitting at 0% on AMC. Okay, I wish I could tell you more. I'm gonna continue to do TA. I promise. I'm not giving up on it. Right now I'm just kind of ruminating because there's not really much going on. I mean, literally, we're at 0%. Okay, that's where we are on AMC. That's not me exaggerating, and we're just chopping around 504. We're not moving. GME is the one that had the move, and I'm just kind of waiting to see if it's going to hold and build support. It has found a little bounce here at 22.14. It's advanced back up to 22.24. Needs to get above, and I would say well above 22.30. And then come back to it for support. But AMC is just kind of chilling out. IWM looking a lot like what I drew, though I don't know what that means just yet. I just kind of figured that it would come back up there. It was a wedge breakout target. So if you've never done a wedge breakout, measure down the wedge. It's a 62% value, so the easiest way to do it without doing math, if you have the chart in front of you, just go from the top to the bottom of the wedge, then just take that whole thing and scoot it up to the breakout, and that's roughly where the 618 is roughly where you're going to hit. So I assumed we were going to come up to 206.30s, and we're at 206.80s now. We did peak and then kind of bottom out, come back up. That's just an easy way to do a simple breakout target. So if you have an inkling for if you want to do pattern trading, that's not a bad way to trade. There's a lot of criticism about pattern trading. I did a few videos a while back about pattern trading on Bukowski stuff. They're still on my site, I think. They're like in the shorts. Really simple, easy. They're literally like under 2 minutes, each of them, I think. I think they have to be in order to be on a short, but they're really quick overviews of like some basic chart patterns. I like them because they're simple and I can go back to them if I want to quickly go back to them. But you can also just do it yourself. You don't have to use my videos. That's Bukowski, most of that stuff. So it's not my knowledge. It's really borrowing someone else's. And so Bukowski is Thomas Bukowski, and you can look up Thomas Bukowski charts and you'll find his website. He's got hundreds of patterns on there that you can look at. He has books that he's written and stuff too. They are very good statistical probabilities. And the basis for his work is not meager. So a lot of people would look at stuff and say, well, that doesn't happen enough, to really justify a trade, or that's not a good way to trade because it's inconsistent. Well, he's not saying it's 100% consistent. In fact, if you go read through one of his patterns, he'll tell you exact percentages over the course of, usually it's like 600 to 1,000 trades. So he's not doing statistical math based on even like a dozen. He's doing it on like 600 trades. So that's a lot. So he's giving you statistics that he says basically like, hey, it's a 60% probability to the upside, 30% probability to the downside that it hits this percentage target. Those are really good numbers to have in your back pocket. So like this is a 62% break here. There's a decent probability for upside that if it breaks up and it holds the support, it's going to meet that. And what he would probably say if I went to his site is something along the lines of like, there's an X percentage. This is like out of like 30, this might be 18 out of 30 chance that it's, what I mean? Like he'll show you as best he can. I think he does a really good job. I've found no equal in terms of pattern chart analysis. Maybe there's somebody that does it better, but I just love the idea of it being just a statistic because it takes away the mystery behind it. It's just numbers, And if you're going to trade chart patterns, definitely recommend Thomas Bulkowski. So if you're wondering, like, where did he get that 62% target from? Well, I got it from Bulkowski, and ultimately, it's not the end. It doesn't mean it has to stop there. It's just that it's the highest probability target. So the ones he gives you aren't the only targets. It could hit lower, it could hit higher, but it's the most likely to be hit, if that makes sense. So you can think about it like as a standard deviation around that number, if you're a math guy. That's the highest probability. So that would have been a really easy trade if you wanted to trade it, and you saw the breakout and then you saw the support here. I think it would have been difficult with that flush, but you could have traded, you guys are like, well, that's only like 1%. Yeah, but 1% can be quite a bit in option years, you know what I mean? In options percentages. If you bought an option with the right timing with that move, you would have made probably 15 to 20 to 30% on a trade right there. So it is absolutely effective, and I use it sometimes just to give myself general ideas. The other thing here that I would use is this. So I marked off this because I was like, well, that's the 62%. So I had these two little bars right here that I made. The other one is this. This is just the drop-off level. So if that 62% lines up with the drop-off level from a previous top, that even feels more likely to me because that's the place where you had support and resistance. It was right here. So it was consolidating into a point around 206.40. So the fact that it wedged down almost a perfect 618 away from that is really important to me. So that was like a double confirmation that, yeah, we're probably going to see that turn back around, and head back up to that level. And that makes it fairly easy. And then we know that waveform analysis exists too. So you could use both. And this is where things get kind of cool because now you've got two different pieces of information that are kind of saying the same thing. We could do a top to bottom and do a wave cross here and see what would be roughly like a 50% wave cross. And there you go. And that's number 3. So now you've got 3 pieces of information telling you that there's a high probability you're going to hit this value right here at 205 or 206.60. Excellent trading opportunity, high probability trading opportunity. You can decide how you want to trade it, but that's just simple math. Now, the reason that didn't really excite me that much was because it doesn't guarantee any continuation. And so when I said yesterday, I think when we were talking about it was that, well, while I do like that, it doesn't really tell me that there's a strong chance that it's going to break above 207. It really just brings you back to that to retest it. So I was hesitant to say we would do anything else because there's no guarantee there. Now, the ascending wedge is another one that we could look at. This is one that, unfortunately, here it's not really an ascending wedge, it's an ascending triangle. So the difference is that a triangle has a flat bottom or a flat top. I would argue that this is an ascending triangle, not an ascending wedge, because it's rejecting off the same spot. Whereas a wedge would maybe be moving upward or downward. These are rejecting off the same spot. But we could do it. I'd have to look it up. So yeah, let's do it because I'm talking about Bulkowski. Let's put him to the test. You guys are like, that's not fair. He didn't ask for that. Nah, he didn't ask for that. It's called thepatternSite.com. His picture of him with his dog is so funny. Let's busted patterns, candlesticks, chart patterns. Anyways, so I'm just gonna search for. Gosh, he's got a lot of ads on here, but who's the I'm not gonna blame him. Let's go to ascending. I think it's called ascending triangle setup on Bukowski. Bukowski ascending triangle. Here, I'll show you guys what I'm looking at. It looks like it's trying to push it right now. Here it is. Here's the background. There it is. The theory behind ascending triangles is that they point the way to higher prices after an upward breakout. It says testing shows they do break upwards 64% of the time as of 2016. Unfortunately, experience has taught me to look elsewhere for chart pattern to trade because ascending triangles often don't perform up to expectations. I found that price rises for a few days, perhaps 5 to 10% or so, and then collapses. In other words, it's rare that you can make money on these patterns for a position trade. You have to be nimble for a swing trade. And I think that's evident by what we saw up top. That's exactly what he's saying right here is like, it did rise. He was saying like, you know, you can rise above, but then it usually collapses. So maybe as a bottom, it's a little different. And he probably has one as a bottom, but throwback, white space, that's important. This would matter to us as well for a potential throwback. So here's all kinds of fun information on it. It's pretty cool, actually. There's a lot here. Here's all the tests. You guys are like, this is way too much. I know, but somebody did this, you know, like he went through and did all this. I think this is about, this is more of like a thing on it. I want to see his, I love all these things, man. Triangles, descending, where's triangles? Ascending, Elliott wave, ascending, busted. AI-powered stock predictions. Let me see if this is a better one. Here we go. This is the different one. So that was more of like just like an article about it. Price, percentage meaning target, up, down, breakout, 70%. So then we're going to do the, and this is based on 1,400 trades, which is a lot. 70%. So here's the calculation. Compute the height from the horizontal to the top trend line, starting at the low, hit, and it's probably multiply it by the above percentage meaning target, add it to the upward breakdown, or upward or downward breakdown. So either way. So if you're doing up, it's different than down. So down is 44%. I don't think in this case it would have worked for the top one, by the way, because it went way lower. But again, it's just a percentage move. So he's looking at it. So this is a good one for us because this actually did break out to the upside. Anyways, there's a lot more we could do with that, but it's basically 70% times the, I guess I could use the bottom, the lowest point to the top. Let's just do it with a 786. And we'll shave a few off. So we're going to estimate it at, without doing like the math. So we'll do it for 70%. I guess I could just add it to this, but so potentially if it breaks above, it's kind of backwards the way I did this. Here, let me do it the other way. There, that'll be easier for me to read. So potentially if it breaks above the marker at roughly 207, we're just going to throw out an estimate here because I don't want to be too complicated. Looks like 215. So we asked the question, I always ask the question like, does that make sense to me at 215? And that's roughly where it would be. Yeah, I think so. That's a gap, and that's the previous floor. So, guffaw? I mean, I always find it really interesting when I do these targets and they make perfect sense. You're like, well, yeah, you would come back to the floor. Of course you would. But isn't it interesting how it measures out really well? and that's a statistical anomaly, like over thousands of trades that he was able to find that is more statistical and not like straightforward. So that's a really simple way of understanding Bukowski, just using them as numbers. But I think that would be a really positive trade. So if this breaks above 207, there's a strong chance that it's going to come up to the previous floor at 214. Do you need to have Bukowski methodology to understand that or to trade that? No, but it's nice to have an extra piece of data that corroborates the same thing. I think everyone would have seen that as a very strong probability. There's a gap here. It's the previous floor. Nobody needed to have Thomas Bukowski tell them that. I find it to be very comforting, though, and useful to know that the quote-unquote algorithms that are setting up a potential statistical likelihood of getting there. Okay? So I think that I've had 214 as one of my targets and 212 as one of my targets, but I think that 215 looks pretty good. And I would probably say that for the most part, this is not a trade that I would hold a really long time for fear of like a throwback back down to like 207. But it would be a simple like breakout trade. And again, trading shares, that's 4%, but that's a big move for options. Yeah, I think he needs to update his stuff, but he's pretty active. A lot of his site information has data that goes to like 2020, 2021, 2022. So like I've seen those numbers appear, so he's obviously still doing it. So I think he'll update it. Yep. Okay. Grandma, get off the anime. Isn't it weird how like we're going to be older, but people are going to be watching like anime now when they're old? I think that's weird. Well, GME is stair-stepping. It is not moving with any kind of haste here. It's better than AMC in some ways, but I have to just call it for what it is. There's still no confirmation. I haven't even looked at anything else this morning. MPW, this is what I drew yesterday. I suspected this might happen. And unfortunately, we look like we have a gap. Yeah, so gap fill back down to the support here. It makes sense though, because when we came in, this area at 450 was support. So this would probably be the retest. I actually think the market looks like it's trying to turn. This is a diamond bottom. The way it's presenting itself to me is like it's widening. So there's a clear widening coming down. That's evident. But then at the very bottom, it widens and now it's kind of narrowing. And that could be a continuation pattern. Diamonds do not have to be turnaround patterns. They are more often used as turnaround patterns than they are continuation, but they can be continuation. So that means it could be in like the middle of a big S curve and you're about to dump, right? But in terms of turning around, this is a really clean target back up to kind of resume the trend that we lost, filled these two gaps going up to 555. So I don't know, man. I think the market's positioning itself for good news. I think there's an expectation that is there. underlying that maybe CPI is better than expected. That's what's happening tomorrow. How about the price prediction of AMC, says Rosalind Chen. You got me, Rosalind. Hi, by the way. No, you got me good. I got heavy price predictions, heavy. But they're not going, it's not going anywhere until it finds either support or resistance here off of 504. So we're sitting in a sort of a stalemate at the moment. My thought is that as the crow flies, if you were just kind of making these moves straight up or straight down, and we don't have any kind of evidence that of time at this point, so it's a tough one. My thought is that you need to get above 522 in order to see an advancement. But if you do get above that and you find support, you should head right up to the top in the 560s, 570s. So once that happens, I think we're going to head to 8. I don't think it's that complicated. And then I think if we slingshot, we're going to go up to about 1475. That's not changed. Those are the big levels for me. So each of those is like a 50-50 kind of thing. Like you're going to halfway up to like, 6-ish, then you're going to go up to like 8-ish, and then you're going to go up to 15-ish, okay? And that's about as far as I think we're going to go for now. To the downside, it's a little more complicated. You'd have to have a change of character, in my opinion. I think locally, you could make a flush down to 480 or even as low as 463 and still be, to some degree, still be bullish because this is all within the same range still. It hasn't broken down, and it hasn't broken any lower creeks, and that's the thing. Going up right now, we would definitely be advancing, in my opinion. If we came up above 521, that's an advancement over the downward creek. So there's a key difference in the two, which is, I think, evident in that it takes a little bit more, in my opinion, to become bearish right now. I'm not saying that you can't anticipate it. You could definitely say, hey, I'm a bear. I think it's going to go down. That's your right. You're absolutely able to do that. If you interpret the chart that way, I can't interpret it that way at this point. I can interpret it as bullish, not bearish. Not because I'm a permabull, despite what people say sometimes, but because of the way the range is set up and because it's iterating downward on top of this creek. That to me is a bullish signal, not a bearish signal. So for bear sign, I'm looking at clearly like a break below 430. I mean, it's really far down. It would have to first break below 460s and start pushing to new lows. So the critical levels would be 460 and then down here at 430. And that's about it. And that would be more of a confirmation for me that we're definitely going to continue to try to make new lows. And then ultimately that downward target's pretty easy. It's like 290s, which is around 3. It's possible that it hits higher and does some like crazy chop in between here and 3, you know what I mean? But the downward target would be intentionally to go to about that 290 to 3 level. And essentially that's like a double bottom territory for us on AMC. I've given my best to try to make the timing as accurate as I can, but I've kind of been 0 for 3 on this particular big breakout. So I timed the May one like perfectly. I don't know, but it was also kind of on a whim. I was just like, all of a sudden was like, you know what? This is super bullish. I think it's about to break out. I feel the same way right now, but there's just so many things going on right now in the market. And I think that it's a different atmosphere. And I don't know exactly how to put it because I don't want to make it sound like I'm like complaining. But it feels very delayed. It feels very dead. The nature of the low volume is very normal for the end of a range, but to just kind of sit here at these same values for 2 weeks, it begs the question like of movement, like there should be some kind of massive move. I'm being genuine too. Like it feels like they're just kind of waiting till the last possible minute. And and it stinks. It's not fun. I know that people have differences of opinion on this. I'm not going to go too deep into timing issues here, but, to me, like, one of the things that stood out was this August 16th date having this really strong targeting that's going on. It's like a battle. We're just kind of coasting between two extremes. And we started this battle when we first entered the range, when we sort of developed we did develop an uptrend and a downtrend at the same time. There was a widening that happened when we first entered. And it just so happens that those up and down targets near 12 and near 3 are kind of spread evenly, meaning like they're both targeting like a similar date on Friday the 16th. You can see it on my screen right now if you're looking. So for me, like that's kind of like a trigger point. It doesn't necessarily mean you have to move before then or something like that, but more like, or you have to move into that point necessarily. I've said that before. Sometimes I think they're just pivots and they indicate like a positioning of the chart before a move. So it could be just a pivot point. But I would say that to me is like the latest that I'm expecting something to start happening. And I've already missed 2 of my deadlines. So you know, it's weird, but I seem to do pretty well. It's really easy for me, I think, to build a range like this and predict very accurately like when and where we're going to be on a wave. But that's because ranges are easy, you know. The ranges with the sine waves concept tend to be very, very mathematical and mechanical. They're not usually very difficult. You can do that cross analysis on a wave and then you're basically done, you know, like it's super simple. You can triangulate it very quickly by just dragging, you know, a 50-50 down, looking at a breakout, whatever it might be that you're doing. This one should be here. And then just checking where that intersects, you know, on the opposite side, and you would have an estimation of timing, and it's usually pretty close. So with triangulating stuff in a range is super simple. When you're trying to predict like a big move breakout, you're trying to predict when that range ends. And everything that I've done has basically expired at this point. So the inverted head and shoulder expired. The S-curve, first S-curve was right here. That expired quickly. We know that. That happened pretty much live. I mean, there wasn't like a lot of confusion about that. The inverted head and shoulder expired over here. This wave, this double wave, right, expired on the 24th. That was like given in the measurements that we did from here to here, you know, on these breakouts and stuff. And then from that point forward, it's like we went to the extremes. We went back to like May 15th. We looked at the middle, and that's done. That was done on Friday. It was done on this dip, you know. So the thought is that Thursday and Friday last week, it's just my opinion, and I can't prove it at this point because it's been delayed. If we had just shot up on Friday into Monday, everyone would think that I'm some kind of, you know, perfect stock price predictor and all this stuff. And it's probably for the best that it didn't happen, because I don't really want people to think that I can do that. Because I know from experience, and some of you guys know that you've been around for a while, that I can't do that. Like, I get it right sometimes, it's really right. I get it wrong sometimes, and it's wrong. You know what I mean? But this is kind of was my last big predictor, and I thought it was going to be Friday. So what I did is I looked at this and I said, okay, well, this expires on Thursday morning. Let's say, for example, that at that point you're like, okay, well, now what do we do? Let's look forward instead of looking backwards. And we started looking at iterations. I still think that my price targets are good. I don't think there's anything wrong with my price targets. I think this $8 one is really strong. Like, it's a super strong price target. I also think the $3 one is really strong, by the way. But the $8 one especially, really strong. All right, I kind of found out that we could measure S-curve iterations, and that's amazing to me. It's a big deal. And I think it's a kind of a form of point and figure calculation, which is fascinating because I just kind of found it on my own time, and I feel real good about that. that doesn't, it's more academic, I guess, for some, but to me, it's a big deal for predicting stuff in the future. However, that doesn't really have anything to do with timing. At the end of the day, it's sort of, it could have something to do with timing. If I guess if you knew where the top was supposed to be, you could maybe measure backwards and find out where it would leave from with intersections of like trends and stuff. Like, oh, this is when it would meet the perfect breakout target to give you that result. But we're in extra innings. We're in overtime now. The chop that's going sideways since about Thursday of last week, Thursday, Friday, Monday, I mean 3 days, essentially 2.5 days of just sideways. All of that stuff to me is like extra chop. Like, it's building a cause up or down. I don't really know how to measure it, so I'm just kind of waiting. That's why I called it Sidecar Circus, because I feel like I'm riding sidecar and someone else is driving, and there's not really anything I can do about it anyways, which is pretty much the market on the whole. But I feel that at this point, that's how it feels on AMC. Like, AMC is playing sidecar to others in the market right now. And some of you guys are going to say, well, it's GME. It's always been GME. Yeah, well, I'm not going to go there. I'm not going to debate that. I think it's partially true that that's the case. I also think it's partially true that the market on the whole does affect AMC and GME, and sometimes we're in a stagnating pattern because the market's stalled out or whatever, you know. We're pushing 207 on IWM. If we can make a break here, it should be a move up. That doesn't guarantee that AMC is going to move, but this would be a bullish indication to me. I think we could start to form a higher marker here, you know, potentially, and that's important. So that would be important to the health of the market. It looks like, yeah, maybe it's positioning itself to do it on maybe on Wednesday news, you know, maybe it's CPI data, and that way if it crashes, they're already at the end as well. They could just dump it. So you're not wrong, Rosalind. I think that when Dave's doing his eye roll thing right there, what he's probably echoing what I talk about a little bit, and I'm not trying to be facetious when I say it or sarcastic or anything, so don't take it the wrong way. But typically, like, usually, okay, maybe like 90% of the time or more, AMC's already positioned itself in either a bearish or a bullish manner right before the news. So it's a chicken and the egg kind of thing, right? So like you have this idea that if the operator has already positioned a certain kind of breakout or a certain kind of mode of operation, so it's already been accumulative or it's already been distributive, and then you're ending the distribution range, and then all of a sudden you get bad news, like dilution, for example. Like the dilution news, both times the dilution news came this past year, it came in the form of a news printout basically after the earnings report, right? So there was a headline after the earnings. They definitely waited on the second one for the dilution news, but they already had set up a distribution. Like it was already a distributive range. So it just looked like it was just waiting for the news in order to move, but the market itself was already set up. The same thing goes for the previous earnings. It didn't do what it needed to do, period. Price action was not bullish going into that earnings early in the year. Even though the earnings was kind of bullish, the price action was not. It had pumped up, but it was already doing like a distributive action. It went too high too fast. It didn't hold certain levels. And I was bearish on it. Like right after that, I was like, I think it's going to go to 6 because of the way this thing looks. It's ugly. And for whatever reason, they're setting it up for a distribution. That's what it looks like. I had no idea it was going to distribute as fast and far as it ended up doing it over time, but I thought that it didn't look right, you know? And so that was before the dilution news. So then earnings was really good. And I'm sitting there like staring at this head. I remember sitting there staring at this Head and Shoulder forming in after hours. Like, I knew this was going to happen. I don't know why, I doubted myself in that moment, because I was like, I had been talking about maybe dropping from 11 to 6. And I was like, this top looks wrong. And then they did it. And they did it all in after hours, and they gapped down, and there was this dilution news, and everybody's trying to comfort me, saying like, well, we didn't know there was going to be dilution news. And I'm like, yeah, but I knew it was distributive. Like, I knew the top was distributive. So there's a sense in which the word posturing kind of has bad connotations in our culture, but there's a sense in which you're positioning the stock for a particular kind of move ahead of time. And if you're interpretationing, good with words. It's good. If you're interpreting it correctly, then you're not going to get it wrong. Even if the news comes, which it probably will, then yeah, you're going to get it right. That's the argument of TA. It's like, if your technical analysis is correct, you're probably in a way predicting what the news is going to be. I feel like the news is just there to validate the move and disguise it, maybe even like a camouflage. And that's why I always like get kind of dumbfounded when these articles come out and they're like, hey, this was a completely out of left field move on AMC to go from $2 all the way up to, or $2.50 all the way up to, 13. And everybody's like, it's completely out of the left field. It's because of GME. All the articles I saw news-wise were saying that it was a sympathy move with GME. Okay. If that's true, why then did I have in mind that it was going to go from 250 to 14? That doesn't make any sense. Like, it makes zero sense for some dude from some from some dumpy town, in the middle of nowhere, to be looking at the chart and saying with some kind of mathematical certainty that he thinks it's going to go from 250 to 13. But this move is purely just a sympathy move because of Roaring Kitty coming out of nowhere. I have no special information at all. It just doesn't make any sense. And that kind of stuff happens, it seems like, every other few months on here. It's like, okay, you know what I mean? The news is going to say what the news is going to say. So you're not wrong, but you're also kind of preaching to a choir of like, well, I don't really know what that news is going to be. So to me, it's like, that I can't really rely on that anyways. And this is why I'm frustrated today. So you're right too. We share in that frustration, because I think you're right to some degree. I think maybe this is the CPI or something tomorrow. I don't know, mid-month. We're looking for something because we're not getting it, whatever it is. We're still at 0%, guys. Like, it's not moved at all. So I don't think so. Like, I think they already knew it was going to dilute. I think they knew what the game plan was. Your operator, Vanguard, probably was very well aware at that point. They had shaved their position. I'm talking about back here. They had already shaved their position from way back. They had like 60 million shares. They posted on September 11th that they now had like 6 million shares. So they had already sold off their position. This right here was distributive action. This right here. And that's all it was. Like, so to say like it wouldn't have gone down, it almost doesn't make any sense. It's kind of like, maybe you could argue that there's some kind of a possibility here that they could have held here and this could have been an SOS with a backup. But the mode of trading was still distributive. Like this right here is a very distributive looking trade. We've seen this dozens of times on AMC in the last 3 years. This kind of a move where it pumps high, and then it chops really low, and then it pumps up for distribution. And like the volume's mostly in the tops. It was a complicated move. It's not like an easy to read one in some cases, because I think you could have interpreted as, you know, this is going to be a wave 5, and it was 1, 2, 3, 4, 5. But then the fifth wave already was priced in to end really low. This first wave's real low. It could have ended really low. I think they already knew it was going to distribute. I think they were taking it up, and most of this is like short covering from this big drop. And we misinterpreted some of it as buying, but once it got to the top, I think it was already predetermined by this point that they knew that they were going to dilute and they were going to drop it. I don't know how, but somebody always knows something, right? So that the same thing applied back here. Like this is distributive right here. And I already knew by this point that it didn't look good. It looked really bad. Almost all the trading was in the bottom. It was having no luck advancing. And we waited around for, you know, a month or whatever, and then we got the dilution news and they dropped it. So again, it's like, it's not that the predictive nature has to be like perfect. It doesn't. But there was no news back here, you know, for like a drop. This kind of stuff was happening as a result of the technical action of the markdown, and we're waiting to find support and all this stuff. So I'm just kind of in that mode of, that's my mindset going into it. If I look at this and expect good news, it's only because I think that the market's positioned itself that way. And I've talked about this too, is like the I don't know, I think we might go back. I think we might go back to the bottom. You guys, we disagree on that, but that's okay. I already know a lot of people don't agree with me on that, but I think we might actually come back down again pretty low. I think right now though, like locally, this is still very bullish looking. So I'm expecting bullish news. And that's why I genuinely believe, hand over heart, that if we get bearish news, that we will not go down first, but we will probably make a massive like upthrust and then drop. Because it would require a change of tune from the operator. This would have to completely swap, you know what I mean, in terms of position. So that's where I'm at with that. I genuinely think that it would have to be a change of character. So you would see some kind of a massive pump, and then they would sell off and dump it. I would have a really hard time believing that they would just drop it. It doesn't make sense to me. If you've accumulated shares for months, you're not going to just start selling here. You'd take it up so the FOMO starts, and then you could sell high and get out of your position with some profit. So that's my biggest concern, I suppose, with news. Adam Aaron has a pimple on his back. Yeah. Well, I think they're going to continue to sell. But I already kind of talked to you guys about why I think that. Long term, there's a lot going on here. I think we're going to come up. This is not exactly what it may look like, but I think we're going to come up and distribute up here around 12. And then we might go higher than that, but I think we'll distribute around it. And then I think we're going to drop again and come back down. My only real question is whether we hit a new low or not, but I think we're going to come back down to near 3 before we go. Because I think our operator wants to do that. That is purely, on my part, my intuition about it. It is not There is technical foundation for it, and I've already kind of demonstrated that in the macro chart analysis we did. There's a lot of good reasons why you might do that, and there's a technical layout that can get you there pretty easily. But in terms of like why, it's purely because I think that that's the way our operator wants to do it. So I think he was joking about the pimple on the back. I think he was being sarcastic. Yeah, I don't think he was being serious. I mean, I could be wrong. Jason, were you being serious? If you were being serious, then we got to talk about what you think is important news. We got to have a heart-to-heart, I think. Rosalind, are you being sarcastic too? I can't even tell now. You might be, maybe you're playing the same game and you're being sarcastic as well. And you're trying to play into the joke. I don't know. No, you're not being sarcastic? Okay, well, he was being sarcastic, I think. You sound like a very nice, genuine person, because genuine, nice people tend to not be as sarcastic. Not that Jason's not nice. It just, usually if people don't do sarcasm, they're usually some of the most sincere people. They just say what they're actually saying. They don't try to like be snooty about it. I'm not making jokes on illness. I know. But a pimple, I think it was a joke because a pimple is not like a serious ailment. So it's kind of understood that like everybody gets pimples. So he was making a joke about how Adam Aaron sometimes tweets stuff that is kind of nonsense. But like tweeting about a pimple would be like the utmost silly thing to tweet about. I think that's the joke. That's the sarcasm. Ew. Gross. Ugh. Nasty, Jace. I'm not reading that out loud. I can't say that word. So. The news is real, Booksy. We're going down 20% in after hours. Are you talking about the pimple news? Or are you just talking about news? I can't even tell anymore. I'm like, I don't know what you guys are joking about or not joking about. Pimple news. Ugh, gross. Crypto, I've heard, yeah, people are talking about Doge and stuff. Getting a pretty big pump. Yeah, I'm not sure. I don't really follow a lot of that stuff, but we'll look at it. Doge. I can't believe that's still around. It's all because Elon Musk said something a while back about Doge being accepted in space or something. I don't know. Remember, like, I remember. What are these little flags? Retail sales, retail permits, building permits, inflation rate, core inflation rate. Oh, look at this. August 14th. Look at all this stuff coming out tomorrow. Inflation rate month over month, core inflation rate month over month, and then year over year. Look at the Doge and AMC. Doge is the only crypto you can use at Tesla? That's weird. Why wouldn't he use Bitcoin? I thought that was his thing. You can't even watch the Pimple Popper show. It does make me kind of weak in the knees sometimes, but it depends on what they're doing. Some of that stuff doesn't really faze me. Some of it, I'm like, blah. It's weird how we like that kind of stuff. I'm showing it like down though, percentage-wise. What is everyone saying about Doge? Am I on the wrong one? Maybe I should have made sure I picked the Binance one. Here we go. Doge USD. Pick the wrong one, guys. It's still the same chart, but whatever. I thought he created Bitcoin. Am I dumb? I thought Bitcoin was like his thing. Who made Bitcoin if it wasn't him? Am I just really dumb? Doge, US Tether. Well, I'm not USD. I usually use the Binance one. This is complicated. There's like a bazillion. Doge coin. Dogecoin / Tether. This is the one from Coinbase. Is that what you're talking about? Tetherist, Binance, Perpetual Futures, USD coin, Tether, USD. The government made Bitcoin? Oh. Satoshi Nakamoto. No one knows who made it? I don't know which chart I should. The Coinbase one? All right. It's still not, guys, it's still not like rocketing. Where are we getting this? They're all basically the same chart. It looks like a giant flag, so I wouldn't say it's exploding to the upside until it breaks out, but that's just me. I'm on the 4-hour chart, and that's what it looks like to me. Looks like a big backup. Let's go to like the daily or the weekly chart. Hey, John. I mean, it looks like a backup to the creek, so it's definitely in a position where it could be very, very, very hot very, very soon. You can see that right there. Yeah, you can see that. 55. I guess I'm just curious why we were saying that it was rocketing or something. Or people were saying, whoa, Doge. I'm just not really seeing that. Yeah, it's in a position. I still think that a better buy would be to wait until here. I know it's kind of far away, but yeah, that's roughly the level. Well, yeah, there's a support there. So like 14 cents. Yep. It's unreal how quickly you can look at a chart and get a perspective. Oh. Well, it's just like basic stuff. Like there was a downward movement, it built out a bottom, it broke out, made a higher high. So then you're looking for a possible retracement. This is the current kind of setup, albeit it's curved. You could look at this with a different vantage point and say that it could potentially come back to, yeah, like that. Like check that creek going down. There's a horizontal here that you would want to break above. It's a high liquidity. It's kind of most of the information you need for the breakout. So right now it's trading in low liquidity. So this could be a bit of a sideways zone if their goal was to kind of get between the top and bottom here. They kind of they seem to position themselves in a good spot for that. So the market, I mean, just on the whole, price wise, price action seems to want to come back to this middle at 11, 10 to maybe 10 to 12. So if we can find support there and break out, it could be a really big deal for Doge, for sure. Wave. There it is. Wave. So what's the 50-50 around that guy? I had already got it. I think that low is it. Hit that low. It's right around that 50-50 mark. This is actually a really clean chart. It doesn't look very complicated, which is nice. I'm going to get rid of this lower trend. So that's good. That's pretty straightforward. So this would be like if you were looking at this as maybe an Elliott wave, 1, 2, 3, 4, 5 potential. Maybe. I don't think it could be, because then 4 can't come back below. I don't think 4 can come below 1. It may not matter that much. Anyways, it seems to have really high extended legs to the upside and then low bottoms here. There it is. Right there. And that's that. So the swing here would be potentially quite large on average. You could see this thing go from where we are now over time, all the way up to maybe back to 27 cents or 28 cents. Sure, it'd be pretty easy to do that. It's probably a, that support level up here, 30 cents. That's just another wave out. So I think the trade itself would be better from 14 to 30 cents than from where it is now, although I do think that it's got potential. The thing is, no one really knows how long it could chop down here. It just, again, it's like maybe you could estimate based on the way it moved last time. Maybe this is like a faster iteration of this. So you might be able to like estimate it. Maybe. So if that's the iteration, just on the whole. If that's the bottom, it could be, this looks like October, so pump up early into September, October pullback, and then maybe that's a November run. It's starting to look like more like an election time run. It's just a possibility. This is purely speculative, but that seems a reasonable thing to me. So it's not really exact. I'm using a bars pattern that I squished. But does it look right? Sure, because it's like you made a resistance here at 17 and you dropped low. So if it came back above and it hit like 18, then it comes back down and hits the bottom around 14 again, which is where we need to build support. There's probably going to be some kind of a reasonable mathematical retracement here. So it's the 786 level. So I'd venture that's the likely retracement. And then there should also be a cross trend here that makes sense. If there's not, then I've got it in the wrong spot. So I wouldn't YOLO on it unless you guys are just feeling it. I like the bottom. I like the way that looks. I think like anything else, it's kind of like has that appearance of like, well, I see the symmetry in the 1, 2, 3. It's like a little head and shoulder symmetry here. There's a double top, ignoring that a little bit and just kind of looking at this. I could see how this could just break out. Part of me wonders if it's going to try to do one more little dive first, just to sort of finish it off. Either double bottom or like a slight spring. Hard to say. Anyways, back to what I was doing before. There should be some kind of a simple enough trend here. That's quite high. Maybe it's sooner than later. Yeah, maybe. So there's a possible target here. That would be an easy one to see. Decent triangulation there for a wave. But then there's another one that's lower. It's on the next one down. That's here. That's quite a bit different. So I would say like window. I would give it a window of possibility. It looks like between August 20th and September 4th, this might have a big run up. This goes in line with what we're seeing on AMC, just by the way. I think this could have a big run in 19. It's just the wave timing. That's all. We know this isn't always the perfect reliability, so there's that. So yeah, right now it's trying to jump across this creek locally. So we started on the weekly just to see like where does it look like it's positioning. It looks like it's positioning to possibly go back up because it's got support. So that's the most important thing is on the biggest picture, it's very possible this is about to turn bullish. And if it weren't the case, then I probably wouldn't even be thinking about much upside here, right? So you got to like kind of confirm big picture. And there's two major downtrends here, a couple trajectories. I think on the whole, this is the one that's going to be met, not necessarily this guy. This is just more of a price in. So I think it would hit here, potentially reject. I mean, it could go higher, but this is just for now what I would see. And then this is the pullback. This may very well be in line with what we see on AMC though, because AMC might have a big move and then have a major pullback to check some stuff. So kind of makes sense, the timing of it with the meme stocks right now. Yeah, so this is the cross right there. That's good. It's intercepting right at that middle. See that M? This shape. This is really good for me. I like this kind of stuff. So you see that middle point? That's the center of the cat ears going down. So these two are your cross lines right here, like in terms of the wave. So I think I'm right. I think that's the mark. And then I'm not positive, but I would say that there's a probability here that it's going to be somewhat similar to this move. It's a similar kind of move up. So that's the opposite side of the wave. So like that would make sense to me. We've done this move before, basically. That's what I'm trying to say. That looks pretty good. Yeah, that's the middle for sure. So I feel like that's right. Yep. Yep, so I see a strong triangulation right now. Again, hard to say exactly when, but sometime August, late August, September, this is possible. Now, when we do stuff like this, we want to make sure that you're keeping in mind the necessary confirmations. So it's not just, oh, there's a target there, it's gonna hit it. No, it's really like you have to keep it in perspective with in terms of pricing, like where and timing, where that would maybe be, and then what you need to get there. So like right here, I'm on a 4 hour. I think that's the 180. Yeah, so that's right above it. It falls in line. It's kind of right between these two. So it falls in line with a concept of kind of a quick, and I mean, this is just theoretical, but like a quick hyper turnaround right here, because that gives you the whip around the 180, and it's also between the two creeks. So it's a way of like back testing. So maybe this move that's higher is a higher move, and that's where the head and shoulder finishes, is like here instead. Maybe it doesn't drop first, maybe it drops second, and the head and shoulder finishes like backwards. So it's like a big pump, and then it drops hard, and then it rockets through it. That actually looks better to me anyways. So I think that's possible. So if it doesn't immediately tank, if it can cross this creek, you should see it push up to just slightly above 1150. And I'm actually going to put another alert here because that's correct. Yep. And then you should see it come back. I don't know how far it goes back, but it could have come all the way back down to like 10, because there's no precedent to go much lower than that, but you could go that low. So I think you'd be sell off and then potentially advance again. And this is where you get the cross over the 4 hour. All of that could happen fairly quickly. I just think that it's a matter of opinion, you know. Maybe it's rapid fire. Maybe it doesn't really pull back very far. I don't really care. It's just there. So yeah, and I guess if it goes parabolic, we might look for a longer pullback up here. So if it just went like straight up, you might get more time down here around 11 and then push out potentially. So that's a big deal confirmation. That makes sense as well locally. I zoomed in a bit. The high for liquidity dropped quite a bit. So right now the high for liquidity is up here at 16. So again, it's a good position to say like, well, I think it can go from here to 16. When we zoomed in a little bit, the high liquidity is actually right there at 12. So those are some good markers, you know. And the other thing I would always do is try to 50-50 it. And that 50-50 is right around the local high liquidity. So my levels of confirmation would be first 11, then 12.5. So basically it's complicated because this is like pennies. So you're looking at, it's really not just 11 and 12, right? This one just happens to be like pretty much 11.2, and then this one's like 12.5. see, I think 11.2. And then 12.5. And then this would be like another 50-50 here. And should be right there at 16. Yep. So then there's the second high liquidity zone right at 16. That's another place. So you'd have another one here at 16. So these 50-50 should line up to give you really simple to follow levels. And they are. So that's a good sign. There's no guarantee if the trade is going to work, but if it's got the right markings, at least you know it's not complete baloney, you know. So those are the 50-50s up to the top here for the verticality of it. So that's right at 16. They're both at the ledges, ledge, boop, boop. Yeah, look, we could just say 16. It's like 15.9, but we could just say, well, let's just say 15.9 or something. We'll just do that. I don't care. And then the final target here would be 1980. 0.198. Not sure about the timing of it. 74 degrees. It's pretty dang close anyways, the way I drew it. Yep. Well, there you go. So remember that target that we got for late August was because of this triangulation here and this push up here. So like now we're seeing a confirmation potential that this is the trajectory down and this is the trajectory out, and that trajectory out meets the top at about the same time. So it's a pretty solid chart. I mean, there's not much to it. It sounded like a lot, but yeah, it looks right. And I genuinely think it probably does have a big pullback. We could use the like if we go to like the 198 here, we could use this to help determine where those pullbacks might be. So you can see there's one here at 6.2. So this is the same level. So that's convincing for me because I'm like, well, that's the same level as this point, the midpoint. So that's a 50% retracement, which of course we already knew that was going to be 50% because we had it at the 0.5. The 618 is kind of interesting though. It's like over here at 10. So that's fascinating because that's where we're at right now. And I think that's the low. Hang on, let me check. I think that's the top rather. Hold on. Yeah. Yeah. Here and here. It's your 14 and your 11. So it would be reasonable to expect it to maybe hit the 5 and then bounce and go back down to maybe go down to 11 again and get that low liquidity on the outside of this as a big throwback. And then you could have like second major advancement going into November, which is election time. It just seems like really straightforward in some ways. So like as a golden pocket retracement, as a historic support, as a low liquidity area that maybe want to be retraced back to, it's kind of right in the middle of those. So it's going to feel like a pump and dump, but it's not. It's a 618 retracement, and then let's see if that works. It's a 1-to-1 right there. So the fib extensions on that are pretty high. Not seeing anything really convincing there. That doesn't really line up with anything. I'm sure it does, like big picture, line up with something. Like the 127 is up at the top. The 1.4 is up at the top. I'm sure that these are ridiculous high, so I'm sure a lot of people are looking at these. These might not be very useful, to be honest, right now. I mean, there's definitely a possibility like later those play in, but it may be prudent just to use top to bottom first and just see where these are. Yep. Okay. It's almost like I drew that first, which is always a good sign. I definitely did not. So this is a 236 level that it hit, and then this is the 618. So it does make a lot of sense to me that that would go up, and then that's the 854 retracement right there. So it's built out. I mean, the thing is like that was kind of already self-evident because we knew that these were the levels. I mean, you can look backwards. Anytime they build a trend down, it's marking off like fibs, magic. You know, they already have a target in mind to some degree. We wouldn't necessarily know what it is ahead of time, but that's a lot of times I think that's part of the build-in because they're using that to calculate these levels before we get to the end. So we already knew like that was a support. It's not like that was unusual. It's weird to me that that's a 618 level golden pocket and you might hit it twice. Which would be flipping the chart and saying that's a retracement. It's going to retrace back down or whatever. So a little head and shoulder like, isn't it? So there's that. It looks good though. I mean, it's a nice chart. If you're a crypto trader, I don't know if you're going to do much better than like an 84% trade this year, like aside from maybe some of the early stuff that happened. And then maybe again later. These are kind of the big swings. So you might get one or two more this year and that'll probably be it for the year. You got to be patient with it. If you're in it long, you probably don't care. Jasmine. Well, I mean, if it's looking like Doge, it's probably the same play. So Doge. I know, right? It's that dog. It's that meme. It's the very definition of a meme stock. Well, bad RM. I mean, that's what you're describing right there is called opportunity cost. It's the idea that your money isn't just going into something; it's also going out of something at the same time. When you take money off the table to use for something, you're removing the opportunity to do something else. So, opportunity cost is going to be a big theme for a lot of people for AMC. You're not alone. Because a lot of folks are looking for big moves on AMC all the time, and it just chugs along till it doesn't. And you feel like you're wasting your time until you're not, So for the record, like you're not alone in that. If you don't like that, then I would not trade. If you feel like you're bored with that kind of stuff, you don't like it, then don't trade long, Don't trade long term. I do both. So there's some stocks that I just buy and I don't look at. I just kind of buy them. Fundamentally, I think they're good. Long term, I think they're good. And then I just don't touch them. Really, unless they're really low, I might buy more or something, But that's a very specific kind of way of trading. If you need to be nimble and you want to see quick returns and to turn that money around and move fast, you need to be nimble. If the stock doesn't move the way you want it to move, then you get out and you go somewhere else. So the only good thing I can say to you, Nicholas, about that kind of stuff is just make sure that it has high volume trading, or that you're not worried about exiting a trade. You know what I mean? Or that it has some kind of staying power. I'm not huge into crypto. I do own crypto, and I just kind of buy it occasionally when I think they're at lows. I don't trade it like a swing. But a lot of the cryptos that are out there, they're not necessarily going to stay around forever, right? And so I can't advise you on crypto anyways. I don't know enough about a lot of them. And every cryptocurrency is different, has different goals. They're not all built the same. Some of them are very distinct in what they're trying to do. And, you know, it's just different. It's not the same as like a trading currencies, period, isn't the same as trading securities. But I would say that cryptocurrency especially is its own beast. So if you're somebody that wants the quick trade, just make sure that whatever you're trading in is somewhat secure in terms of volume, how much the market interacts with it, the staying power. You don't want to have a crypto that you're buying into heavily that's very speculative that could get a rug pull, in my opinion. And you may be a high risk player that you like to do that. You like to, shouldn't say player, I should say trader. Player makes it sound like a game. You might be a high risk trader that enjoys that and you don't really care because you like to see the big returns. And I can't tell you if you are, but yeah, but that's part of it too, is like the market is very, it's very swing, you know, at times between the two. We've seen that crypto has had some serious downside with the market, and we've seen other times where it runs really opposite. And I remember in the article I read that BlackRock was talking about there was a lot more interest in cryptocurrencies than in the past. So that's something to consider, that the big players are starting to really put their feet in, you know, and they're jumping in to cryptos. It's going to be a operator's game, you know, in some of these bigger ones. It's no different than the market in that regard. So just be careful. I think a lot of people assume that cryptos are like somehow really different than in that regard. They're like, oh, well, it's more real because it's more, you know, but that's not really the case anymore. Your big companies like BlackRock and stuff are definitely investing in cryptocurrencies. So they're picky about what they're investing in, but they're investing. So they'll be there with you. So I don't know, man. Part of me thinks that crypto's still in like an infancy stage, and it's not at that point yet where it's got high enough demand to be stable. But I don't think that's really the case now. I feel like that's changed in the last few years. So good and bad, right? You bring the shark into the waters, there's going to be some blood. But at the same time, they may help drive it up. I'm not a ground man. Like, I didn't get in there when the crypto was at nothing, and it wasn't something, I mean, lots of people made a lot of money in crypto and then they lost a lot of money. They lost like billions in cryptocurrencies. And I'm like, look, I don't doubt that it can make you a lot of money. I guess for me, I just see it as, it's hard for me because I'm not educated enough in it that I don't really want to invest too heavily in things that I'm not sure about. So I don't mind throwing a few pennies here and there just to see on the speculative play. If the chart is good, and that Doge chart looks good, if the chart is good, I might consider trading it. So I set an alert, you know, because I'll consider trading it if it looks good. But it never fails, and I don't mean to be, you know, I don't mean to be dismissive, but it never fails. And anytime we're on a stream, people start mentioning crypto, everybody wants me to look at their crypto baby, and I'm like, well, you might have a really good one, you know. Report back and let me know. But I don't like the that kind of rabbit hole because there's so much right now that are just very high speculation plays, and I get kind of nervous putting that on a stream. And we've had plenty of those, by the way, that aren't even crypto. And I'm like, well, this is a penny stock. You know, like if you're in it and you're making money, I can't tell you what to do, but it's a harder one for me to like chart and then say, yeah, this is a good chart. Even if it's set up okay, it's like, well, this is a penny stock, you know what I mean? It's like it could go to zero and that kind of stuff. So I have to kind of keep that in mind. I'm not saying cryptos are all the same as penny stocks, but a little different because they trade differently. And some of their valuations are based on actual valuation of the currency or whatever. So again, it's a little different than somebody trying to bankrupt like a little company over here in the corner. No, it's fine. I'm not mad. I guess I feel like that's just something that I'm hesitant to do all the time because of the nature of it. It's not really my area of expertise. And I get nervous talking about crypto because in the back of my head, I'm always thinking like, is this going to perform like a normal chart? And I don't always know that that's the case. Sometimes I think it's not going to. So as a technical trader, it's like, it could, if it's got a huge amount of interest and it's got clear patterns, it could trade much like a normal chart trades. But then I always wonder in the back of my head with some of these other ones that are more speculative, I'm like, who knows, you know? This is like uncharted territory. Maybe a decade from now, there will be a lot less speculation and we'll know kind of who the winners are, and maybe 5 years from now, you know? We'll have a lot more of that surety. And we'll probably be able to see enough chart data on some of these newer ones that you're like, oh, there's plenty of data here, you know? That's another thing. Some of them are so young, people want me to look at super young charts, and I'm like, all this chart has done is drop. You know, it doesn't even have a bottom yet, or that happens quite a bit on here. This is a little different. I mean, Doge is obviously a big deal, but I have to say it's still speculative. Like the way this trades could be very one-to-one with what I'm showing you, but that's because it's set up in a way that it makes sense. It times out well, makes sense on the whole. I don't really know that this is going to trade like a normal chart. And so there's this concept that I'm thinking about in the back of my head, like, well, up until that point in time, like, that you get those confirmations. I mean, it's really step by step here. The first thing I drew here was if you have a pullback, this is a little tiny head and shoulder kind of module here, this little guy, and it could come back pretty low. You know, where maybe it's trying to retrace back down for a double bottom at 9 or something. And I don't know yet. We'd have to wait and see. And that could lead to a whole lot of sideways, you know, and like a lower creek cross. And that just changes everything. So, question marks. Still just chilling on MPW. I think it's also just waiting for... I think it's everything's just kind of running sidecar to the bigger market right now, I think. We're not really seeing a lot of... I mean, I'm not. Maybe you guys are, but I'm not seeing a lot of outliers here. Seeing a lot of sameness. Like everything seems to be doing kind of the same thing. Nothing's kind of making a move. So yeah. I think there's a lot dropping tomorrow about inflation reports dropping tomorrow. Maybe that's why I had the 14th marked off. We didn't have FOMC, but we have reports coming out for year-over-year inflation and CPI and other stuff like that. So month-over-month, year-over-year. I think that's probably what we're looking at. And we'll see. So I think if that comes back good, then I think we're going to go ahead and make this move and get started. I think if it comes back hot, probably see this drop, and then we'll see. But that's just speculation as well on my part. You don't really know the future, so we'll see. I'm saying that a lot today because I don't have the answer. And that's really frustrating for me because I'm ready for it to go. I mean, I'll be honest with you guys. There's nothing to hide here. I am bullish on AMC. I think there's parts of this that are bothersome to me. You know, I mentioned this kind of localized top here could indicate, you know, an attempt to come back for like a spring action either at 480s or even as low as 460s. That kind of stuff bothers me, you know. If bad news comes, you know, there's a potential we could get kind of a pump and dump, you know, where it's just up thrust to like, you know, near 550 and then dump. And that kind of stuff bothers me. The change of character for me on the big picture is kind of far away. I wouldn't be able to confirm it unless this bigger creek drops. Because of the nature of it, we've traded so high. It'd have to be a really obvious change of character. Yeah, but the next S-curve up on the plate is this 3, and I haven't removed it. It's still sitting at 504. We can just shift it over, I guess. We can keep shifting this over so you can just visually see it at least. We just keep shifting it over because it's not happened yet. But these are still the same levels. They're not, nothing has changed here, just timing. If they change dramatically enough, if it takes long enough, they could be kind of wildly different. But in terms of those upward levels, they're basically all the same. And my bigger concern right now is if you look at 3, it doesn't go that high in relation to this S-curve versus the top. So I said yesterday, I thought it was kind of in the right spot. It wasn't a sweet spot yesterday, going into today. Like right here, Monday to Tuesday, you see it on my chart right now. It's a sweet spot for the, here, I don't need these little bars here. It's a sweet spot for this overall move. I don't need that one right now. That's not even right anyways for this guy. So what, Booksy? Can't you just like lower this down and use like the lower end? I could. I like this one. I think it's the best one. I could do it though. I could use one of these lower points and we could place it over here and say that's the sweet spot. But there's nothing else that really works quite as well long term. So that's why I'm like annoyed right now because it's past the point of... And maybe that's a good thing in some ways because then we're not hooking, we're pushing above it. But then you don't have a way of, that's what I'm stumbling through my words here. You don't have a way of knowing when if you don't have that triangulation. So if I push it down and I say like, well, that's where it's supposed to be and I'm going to keep it here, okay, that's fine. But what happens if it runs a a little bit early, you know, and it runs up above. Okay, well, cool. Then it's above. Maybe we get confirmation and we even pushed even farther. Great. There's nothing inherently wrong with that. The issue that I would find is that that's not giving me a good sense of timing, because then anywhere it's above, you could say it's any of these periods. This does triangulate really well, you know, when you look at it as a fixed value up to a fixed line, because then you're like, well, there's no question it's going to be at this time, at this, you know, if it moves off of this price. I think you guys are getting where I'm coming from. This is a really long middle for if this is an S curve. Like, this is a silly long middle. It almost doesn't make sense, right? Because of how wide it is. But maybe, you know. So it's a bit annoying. It's starting to look like a micro version of the bigger range too, like here. Just very like pump and then sideways, no real move between the two extremes. Yeah, I gotta wonder. I don't know. Running out of words to describe my annoyance, my frustration with the price action. Maybe the operator's annoyed too. We don't know. Maybe they're like, you know what? There's not enough people here to buy in. This is garbage. I would laugh so hard if it went to like Friday and then just ripped all the way up somehow. I don't know how it could do that, but I would just be like hysterical to me. I can't even imagine that now. I'm going to try to flip the chart for a bit. Sometimes that helps me to get out of my own head. Like, I want to see things a certain way, and then when I can't see it, I get kind of annoyed, and I start trying weird stuff. But sometimes it's helpful just to just get back to like simplicity by flipping it, because it sort of presents itself as like, oh yeah, this is the chart that doesn't. I mean, it's not real in some ways. It's not a real. It's not a real pattern, right? That looks like a cat ear right there. That paw with the ear. See, that's what I'm talking about. Like, almost immediately, it's like you can kind of see it differently. Oh, yeah. I think we're right about this. This is like a middle cross. Maybe. No, that's got to be it. Actually, that's pretty clean. I don't know why I didn't drive it all the way backwards. See, almost immediately, like, you can find something you didn't see before because you're like, this is not the same chart, but it is the same chart. That seems kind of obvious now. I don't know why I didn't see that before. So this ends up being very, very, very important here, because if this is a cat ear and this is like breaking down, this is a paw, ear one, and then there's ear 2 over here. I don't know where it is. Maybe it's there, maybe it's not yet. It definitely looks like it could do one more move still here. Like that wouldn't surprise me. Going into like the 14th. Pretty solid. Why did I draw this where I drew this? That looks completely wrong. Oh, that's right, because that's the one that I was messing with just a minute ago. Just keep it simple. Yeah, Thursday, 570. Triangulation right there. It's that first target. It's that first level over here. I think this was 573. It's the same value. I just got to do this for myself sometimes too, just to clear my head. Because I can't stand looking at it and not really being able to kind of see what's going on. Yeah, I think what they did, this number, this value that I moved, is they actually had built out the creek like here. So it's still being somewhat respected. But this is the raising of the creek. I'm looking at a chart upside down right now. So this is actually up, not down. This is a raising of the creek. So this is being tested again right now locally. So it did get there. And I see. Guys, like, what do you see, Booksy? You see the move on 3? Notice that 3 goes from 440 up to 503. And then if you look at 503 or 504, it goes up to 575. Now check out where these creeks are going right now. See how this one didn't have like a huge back test here? But there's a drive towards that top of the range. And notice that that's the same value. So I think 3 is being pocketed. I hate to say it, but it looks like 3 might be pocketed for a Thursday into Friday move, because that would give it like an adequate spacing. So if I were looking at this S curve, I would be looking at this guy right here. So this ended up building it out much wider. Originally, I think we were looking at it like this, thinking it was going to be really narrow. And I don't think it's ever like an impossibility that you're just, so that's why it looked wonky when it didn't go. Remember that? Because this is the Friday fractal right here. Like, so this is the middle. This is where the termination point was. It's kind of in the center of like an expansion. So now, if you take it from where it is, this gives you an adequate 50-50 right around that center fold. That's your S curve. It's much wider than expected. It's a weird way of kind of delaying it, but it does work. It's the same price, same targets. It's just slower. So it looks like a, this is where things get kind of bizarre, but it reminds me, the mirror symmetry in the middle was something that was standing out to me today. This little up, 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 triple top with the double side and the double side. It reminds me of a rotation on the symmetry. So you mirror and you flip it, and it just kind of builds out a reversal action. Although in this case, got this kind of backwards. This ain't working. In this case, I'd have to do it by hand. Yeah, I don't know. It's kind of confusing. I guess the simplest way to do it would be to kind of look at it as like a widening, but it's not doing any of that. It's just sitting here. So it's making it not look right at all because it's not widening. That would be the center. That's funny though in some ways. You guys are like, none of this is funny, Booksy. Well, it kind of is because it makes that Friday the 9th look like a pivot point. And it very well could be that I was right. That remember that middle that happened at 1400? It looks like it's basically like in the center of this structure. So what's interesting to me, because it's like, well, we weren't right about that. Like it didn't go up. But if it's the middle of that S curve, then we were right because it did go up. You guys are like, well, you're not right if it's not right. Here, let me show you what I mean. Hang on. I'm going to get rid of some of this line and just take a look at this. So I wouldn't have been right anyways because this looks like noon, right? But noon to 1400 on Friday. This is roughly like the center of that S curve here. And at first I just thought, well, that's just that's one of the first changes of character. And I wouldn't have put much more involved in it. But it's kind of interesting to think about it now. Like, what if that pivot represents the center fold? It's all kind of like slightly off. What if that represents the center of this iterative thing changing? Because this is right where it changed character, right here. This is where we jumped this creek, and it was the first time we pushed higher. This would be the second time. So this is where the change of character happened at 503. It pushed up to 515. So if that's the S curve, then I just measured from the middle. Then the second S curve, if you've got it correct, would be right where I've got it. So this would be Thursday in the morning, which is kind of late. It doesn't look quite right. How is that possible, Booksy? It doesn't make any sense. I know that's the middle of that S curve, so it would have to be the middle of this S curve. Why is this off center then? It doesn't work. It shouldn't be off center. It should be right on center. All right, I'm going to do something real quick. You may not like it, but I'm going to do it anyways. I need to try something without all the other stuff on the chart so that I can see it. So I'm going to use a GAN box. And what this will help me do is to visualize the S curve a little bit better. A GAN box does not by default have to have everything. You can get rid of what's called the angles if you want to. I'm getting, excuse me, man. Sorry. I'm wanting to see the 50% price level, and I don't really care about anything else right now. So I just need to see where the halfway point is. So if the halfway point is, if we're right about that, is at maybe at 503 or 504, then I can sort of see where the angles are supposed to be. This should be building out accurately. And then it already has like the cross in it, so It should be done because this will be like the push up. This will be the push down. So if the transaction is completed, it would be finished right around the 7.5. I'm just looking at symmetry. See that? So now it's a little easier for me to do a little bit easier because you can see that each of those, I mean, gosh, they're really on point, aren't they? With that wave. These like angles are really tight. The trajectory's in. It's missing one here because it's too steep. That's the same trajectory right there. It's coming from the same pivot, which makes sense. You could do that from any bottom. It should look right. But what's interesting is whether or not it's going to S-curve, it should start obeying those angles to the top side. That's where things get spicy. So the bottom is kind of a given, but the going upward is not, because that's like future, that's predictive. So in theory, if you were doing this as a principled like S-curve move, we could use the GAN box. I don't know if it's 5 or if it's 505, but that's it. You could use the GAN box as a way of helping you to structure the S-curve, so you know like where the middle is. You want it to go through the middle, and you can see it right there, and that gives you a really structured S-curve, potentially. I can tell it's a little off though, because this one doesn't actually come up into the middle here. Well, there you go. That's probably as good as it's going to get. So I can see this wave around fairly simply. So that structure looks good. And then what happened in reverse here, if I look at this backwards, is this goes back to a 2.5, and it just chops, and then it breaks out kind of last minute and goes down. So I would say this goes back to the 7.5, unless I'm just way off with my timing. I might be a little off. And then, yeah, you'd expect this to move down until the 7.5, which kind of did. And then you would expect it to kind of chop. Well, unfortunately, it looks like it would take forever around this value and then head back up. I feel like I'm a little bit off. I'm not really sure where, but I feel like it's right here. Like it should be a little bit tighter. It's hard to make these like perfect. That looks better to me. That's why I'm using the box instead of using just my creek crosses. Sometimes this box really helps me to... Oh yeah, and there's the low. Is that the lowest point? Let's see. No, it's not the lowest point, but it is a low. All right, so it just kind of depends on what you think about these angles, I suppose. What we could do to mirror it, if we really want to mirror it, is take this 82-degree angle right here and just drag it up here. It's the same angle. And then you would have it basically being exactly the same. So it looks like takeoff will be Wednesday into Thursday. And then Thursday you'd be at the top. So Wednesday is definitely a day for possibility. I'm just mirroring it out. I'm not doing anything like super fancy. It might look kind of fancy, but I'm just saying, hey, if this continues the way that it entered, in terms of rotation, that's the way you would see it rotate around the center fold. And that does give you the right price target because it gives you the same measured move out that you had in, which is that S curve completing. It's just happening in like slow motion. So what isn't included here might be the cross to the other side. So this is a little trickier because it's not really there. And when you use the GAN box, it's not going to help you to find it perfectly. It's just not there. The creeks are there. I can see one right here. That one looks really strong. That one's a really good one right here. So this might be one we use. And then this guy. So this is another one you could use. It's already developing itself as kind of a creek. And that's about it. So those two are both really good creeks. Like they're definitely there. This one looks like it's about to break. So that gives you a precedence for maybe upside potentially to the next one. What I was going to say was like the swing around doesn't really seem to matter too much unless we look at something like this, which is this is the angle at which we went down. So if I'm looking at it from the point of view of we have to make a certain kind of retracement, it would probably be this guy, not this one anymore. Maybe back down. We said here though. Doesn't really work. Whatever. Maybe back down to 493 here. It's just a matter of like turning around a pivot point. So this is rotational, which is kind of a way of saying radial, like you're going in a circular motion through certain actions. Yeah. Right there. So this is one of the radial moves. So it's going from pretty far back. I mean, these actually were kind of set up in the crosshairs a while ago, so they're just using them for this particular end. They should be roughly complementary angles around a pivot. 10 degrees should be about 10 degrees. So I like this one as a possibility for a break here right now. I think this one's pretty strong. And then the rest of it doesn't look like it would go anywhere until later. But then when you kind of get rid of some of the noise, it would be easy to see how this was like an area of like movement. Right now we're not really getting any movement. But it would kind of be easy to see how using this like minor rotation here, you could see that drop on the other side. So if this ends up being like an S curve down from maybe, and I hope it doesn't happen this way, I just kind of trying to see how it would work mechanically. $83 degrees. I think that's the window of opportunity right there. So if you get another head fake, I think it goes down to 491. And that is where you have, this is an S curve down. It works out because it's going back to recheck these values. So it's a bounce. You need to come back up because you can't leave from that value. You can't just like take off from there. You'd have to come back up to 504. So potentially this is like a potential cat ear right now. That's what I'm trying to say. So what I think's happening is that it's like an ear one, ear two kind of thing. You're getting the middle. I'm not positive about this. definitely not positive because there's plenty of things that could happen. But I think you could get an easy head fake here and then drive the price down and then basically come back up Wednesday. So this would be like a drop into after hours. And then you get positive news 1 on Wednesday, positive news 2 on Wednesday, or maybe just positive news 1, and the market pushes it back up, comes back up to 504. You take off at the right time. This gives you the adequate like 50-50 swing that you're looking for around right there. And yeah, the rest of it's in the books, as they say, history. And there you have it. I don't know. I mean, there's a number of things that could happen. This right here could just hold and break and come above. I'd prefer that. I mean, this would be a nicer way to go about things, is to have a move up and then come back down and test the top. You know, you could have a very similar move doing the same thing. But to me, this looks pretty likely. I feel like a head fake here to 510 and then a drop below gives you an S-curve down to hit the lower mark that you're trying to get to. The rest of the chop, debatable in terms of how low you go. Maybe with this extension, they could, during that after hours or whatever, open it low. Maybe it opens down here at the gap at like 482. So there's that possibility as well. Like there's some kind of a gap down. And then Wednesday we open at like 482 and just fill the gap and start going up back to the top. Like either of those would make sense to me, because that would give you that adequate swing around and retest. And that's kind of what we were looking for forward wise anyways. And then you'd have a really solid move up into Thursday. And the rest from there is kind of history. You don't need to, I don't feel like we need to really overthink it from that point forward. Wasn't supposed to move that line. But yeah, that works. That works for me. Now, in reverse, this is where things get kind of dicey, because in reverse, that is wrong. I did that in the wrong spot. See, I knew I shouldn't have moved it. Should be like right there. How did I do that? How did I get that wrong? Maybe I moved it over. Wish I hadn't deleted that so quickly. Should have marked down the middle line first before I messed it up. Oops. That looks right. Kind of implies that I was a little wrong about the thing, though, if it doesn't set up higher. Or that I'm wrong about where the middle actually is. Maybe the middle's higher. So this only gets you to 567, which is closer to the first target I had, not the second one. I gotta move it down. I'm just gonna do it as I see it. I don't care if it's not perfect. It's where I want it anyways. Stop doing that, Booksy. Did the same thing again. I need to see this trajectory here, and then I need to see this guy here. Then I can delete it. What gap? 482 down here. Just a thought. I mean, if you were going to drop anyways, that's where I would do it. That's all I'm saying. I don't know if it's going to do that. I'm just looking at it. There's 3 bullish outcomes here, which is fine. It's a lot. I'm just looking at pathways. Uncertain about liquidity, so I want to make sure that the pathways are intact. Okay, so maybe a little lower than expected, but it does go back to this one, which is not the bottom, but the actual support right here at 461. So I think I misjudged it. I think I was trying to go from the bottom, and really that support is a better trend. So you can see it on my chart right here. It just looks better. I think it's stronger than the bottom. Both are good. There's nothing like inherently super wrong about it. It's just I think that bottom one is stronger. So that's all. Yeah, the only thing messed up about this is that measure from the middle. It doesn't add up right. So maybe this moves from like a lower price. So maybe it does have that back up to like 495, and that's where we're actually measuring the bottom from, or something like that. 496. Not sure. Or maybe it just goes higher, you know? But what I wanted to do is really get that precisely, because that helps me to have trajectories now towards it instead of what we were doing before, which was looking backwards. That could have been the pivot. I think as much as I was kind of beating myself, and I did beat myself up over, I was not happy about that. As much as I beat myself up over it, I think that Friday at 1400 was the potentially like one of the center pivots, and it really would have been the change of character if that's where the S curves start forming out instead of dropping down. It would have been in that middle here. I actually may have been a little late, not early, which is what I thought. I thought maybe I was early, but I actually may have been a little late. It may have been right here, right at that change of character, and not at 1400 that day. This could have been it, because this could be representative of like the middle of the S curves that are starting, which I guess makes sense. I don't know. Didn't occur to me before that that could be a possibility, that that's where I should put it. So I guess in that regard, I'm happy to be wrong, but that could have been very close to where that iteration ended. So if these S curves continue, the expectation is it's a little complicated, but the expectation is that you could continue down to about 490, 491. I think that that level kept coming back up anyways, and then 485. So those are still like the two, they're just constantly there. They have not changed. So I still think those are really important. So my expectation would be come back down here. So this is actually a wave out, resistance, right? Then it breaks over that resistance here. So this would be a wave to go backwards and check that at 492. And then potentially we could get something like a gap down that upon the open, when the news hits, could end up filling that gap for us. It's just a thought. That's why I'm wondering if that makes sense here. But this does make sense to come back down to 491. I've been kind of talking about maybe that as a possibility, but it seemed too low. And then I raised the creek up because I think it's just higher, and I've been using it lower and assuming that it's broken there, but it'd be smarter just to keep it higher at this point, because this is going to give us a better judge of an actual breakout. So this is a parallel to that bottom creek, so it's basically a flag, and I think it's a strong enough one that we should keep it, as I think we're going to encounter this and break it at some point. And either way we do that, that'll be a big big deal for us confirmation wise. That looks really good. I'm happy with that now. I was getting really annoyed with it earlier, but I can see it at least. The question about the rest of the S-curves and all that jazz, just kind of wait for another day. I still think they're built into the move. I don't think that largely anything else has changed. So yeah. I guess at that point, my only major issue with this chart is this kind of deeper. I'm assuming there's going to be these deep pullbacks after every S curve. It could get really dangerous for us. We could go to like 567, and I mean, just in theory, if it doesn't just take off, we could end up dropping really far back down before it takes off. We could have really deep retracement. I definitely don't want to see an S curve followed by a chop for 5 days. That doesn't really make sense. Yeah, what I'm saying is it makes me a little nervous to think that this comes up and then drops back down to here. Maybe that's a really smart way to kill the momentum on it too before another move. None of this looks like it would happen before Monday, which is also frustrating, just timing wise. So I think this pump up to 567, for those that are looking for an out for some calls, if this rockets tomorrow to like 567, just be really mindful of what happens, because going into Thursday, I mean, because there could be an opportunity to exit calls and options and junk. I mean, if the move starts on Wednesday, you definitely could have like a Wednesday to Monday move. That's not impossible. It's just, I don't know how momentum will work with it, and I'd have to kind of just see it happen. You know, if this were like a blink of an eye, like boom, 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 over the course of a couple hours, you might expect this could just keep going like that. But based on what happened here, it really stalled out after that S curve. So I'm not really sure what to sort of make of it. Yeah, I think it's possible you could have some pretty massive pullbacks, and that easily could be something that they use to kind of keep the stock at bay, maybe like 520 or something. I don't want that to happen. I'm just thinking out loud. That could happen. It's just the way in which this chopped up. If this ends up going backwards here, we're going to be in a bit of a pickle, because we'll have to sort of consider whether that could happen again here on an advancement. S-curve 1 did that, drop back down to hit this support. S-curve 2 might do the same thing. This could be a really nasty iterative outcome. And then things get kind of complicated after that, but you might expect there to be another one. I think 3 and 4 were really similar, or 2 and 3 were really similar. So in terms of pricing, so that one might not be as crazy, but it would probably look like us going from, I mean, it's hard to say. No, it's the same value. It'd be like an SOS kind of thing. It'd be us going up to the top at 6. Forget the build out on the whole. I still think that the high targets are there. But in terms of like the workout here, this could definitely be a possibility. This gets you back up to near that top again. And it's the SOS area. And this one would be pretty fast. Yeah, because at that point, you don't have to do any more back tests. This is LPS, LPS, SOS. I don't think you need to drop through because the supports here, there's 1, 2, 3, 4. If it breaks that, it's just going to fly. That'd be like the fifth. 1, 2, 3, 4, and then 5. I think you push up, come back down. I mean, it could all happen before Monday. It's not impossible. It could just be crazy. We could end the week at like 520, or we could end the week at 560. 560 be much stronger. And then basically, like, right after that, you're just kind of going. I don't know. It's tough. Based on this timing bit, that would be ideal because then you're basically end up bleeding up right on that marker. Maybe Monday is just like insane. We could have 100% day. It's happened before. It wouldn't exactly be shocking to see this ride up, 100% or more in a couple days. It happened over here 2 days. So this was a Monday. So just a massive potential there for a move. This should be on top of that one though. So actually, yeah, it almost makes more sense to go ahead and be higher on Friday in this case, not lower. I know it's a little odd because we may expect, well, someone will say like Max Payne's 5 or something, and you're like, okay. I mean, same thing every week, right? And I'll say my same little spiel about Max Payne every week. I get it. But if this happened to change Wednesday, Max Payne's going to change before Friday. It'll be at 550 or something instead. So we could easily see how it could pin underneath like 550 on a Friday, but it almost works better to go ahead and move higher. Push 6. I need to see if there's any other evidence that this is likely. There should be another intersect that I can use. I didn't really use this one before. I used the center one on it. But this would be resistance, potential resistance here. This is a pretty big one too. This one's got a lot of hits against it. Okay. Well, I guess it's the difference between the fast path and the slow path. I don't know. And it's pretty close. Interestingly, like both of these markers, they're in the right spot. Both of them are from the previous 50% mark over here. So I'm trying to place them in the right location. Both of them seem to go slightly above their respective creeks here and here. So it makes me wonder if you get some kind of like a hook, quick top and then a double top that stops there and drops it. So like it pushes the resistance and then comes back beneath it, kind of like just again, like a move up that pushes and then it comes back underneath and then it goes to a retracement, here and here. That would work. But they're just slightly off. And I know my lines might be slightly off, but I just find that to be kind of convenient. This has to end above here. I mean, that'd be a really huge signal too for everybody to trade it. And it passes above these creeks here, so I don't know, man. I mean, it's just a theory. There's a lot of thoughts here that I could go into on potential tops and whatever. It could take a lot longer if you wanted to take the long route and just kind of hang it on certain S-curve math, and you know, you might see this as like, oh well, maybe it does go up, but it's going to be way over here, you know, in August. And you know, that's possible. It's not like this has to happen really fast. I think my imagination was that it was going to be very similar to the previous one. But it would not be out of the realm of possibility that if this is taking a long time, that you could get some serious chop here and then drive the price up later, like over here. It's just not quite right. Yeah, mathematically, I think it's slightly off. But yeah, you can make the argument that this is gonna like chop sideways for another, I don't know, another week at 530. I guess you could see that as a possibility, and it'd just be really slow going. But that's technically even. I mean, it would be an even way of doing it if you were really wanting it to be like perfect. Things get a little bit obnoxious after that, because then you got to start looking at the highs and, well, how does it then get to the next one? And it doesn't even really make sense, because that would lead you to, I mean, this is where things get kind of dumb to me, because it's like, well, then you're just looking at constantly going back to kind of the same trend here on this rise. And I don't know. It does work. Maybe I shouldn't question it that much. And in the grand scheme of things, it's still spraying into LPS and just SOS. It's just really long-winded build out. Completely different than maybe what was anticipated early on with the moves. I don't even know where that one goes, because it just goes off to nowhere. It doesn't really matter. The top one's almost irrelevant. It's just sort of like, once you get to this point, if you can make that advancement. So this is really slow, but this is kind of September 5th. Now we're getting close to that FOMC garbage. So I'm sure it's over here, right on the, what is it, the 11th? So if we take a really methodical approach to these iterations, they're not very exciting, but that's like the real methodical approach to it. So very, very boring, but big moves nonetheless. And they're kind of truncated in some ways. They're not added together in the same way because they overlap quite a bit. I could see this working as a manner of repetition. It's very slow. Very different from maybe the previous one. What about all those other targets? I don't know. It's not met, I guess. It's already like at pinch point. Like it should be flying off the shelves, you know? So it's not like this is super weird at this point to talk about a delayed action or whatever. I mean, oddly, it still works because the even though like it's not in the right place in terms of a parallel, this parallel is perpendicular. I mean, it's just a perpendicular. It's parallel, excuse me. Why did I say perpendicular? That's completely opposite. This parallel is also there. So if you were just looking at this from the point of view of like, hey, you've got that move and you can put it wherever you want to put it along these kind of trajectories, then you could put it over here. It works. It's just the lower target, which again, it's like that kind of doesn't make sense to me because if we're taking longer, why would we not go higher? But it does work, so it's not inefficient. This is still, this is still an effective way of understanding it with sort of the A plus B approach to it that we were using. It's there. Yeah. And then all the people complaining about how we're not supposed to move till September would be satisfied with this one. So it would work its way out in a very, very slow manner. Build up, build up, build up. I think you'd have some kind of a fake out drop on the 11th, 10th or the 11th. This would be like a big S curve. I don't like it. It's just there. But I think it's a very simple formula in terms of the move. Yep. And then the added values are still there. And the 50% still there. It just hits the next parallel. It doesn't hit this one. It hits this one. So instead of that acting as like a 50-50 sling, it just acts as like a top over here. So then by September 25th, you're at like $13 or whatever. Changes the dynamic of this quite a bit. Very different outcome perhaps. I know you'll say that probably like, well, you know, that's fine, but where's there evidence of that? I don't know. You know, I just did this, so it's not like I'm not sitting here like a fortune teller saying that it has to work out. I would have to go back and look at all of these markers and see what's likely. But I'm guessing that there's always contingency in the market. So we may look at something like this and think it doesn't make sense. It looks like it's from the drop-off value to the peak. It is that potentially, but otherwise I'm not really seeing a lot here. Like maybe this value. I don't know. Not really seeing a lot otherwise. It kind of confirms it. This one's really solid right there. Here in the middle. That one looks okay. That's really strong. That's the one that I was pretty sure we were going to have to deal with. I suppose we would push above that in the previous example. This top doesn't really make as much sense, but this early cross is almost better in this one than the previous one I did. So that one's really good. It's almost perfect. Here, let's go backwards. Let me do this. I'm going to use the top and bottom here. And see what that points to. As before I was using this breakdown and some other levels with it. I've already mentioned, I don't think that the timing of it, the timing of the move itself doesn't really matter at this point, like where we've done the measurements before. There's not any real indication that that timing is that's actually much higher. It's tricky. That's quite readily on the 11th on the intersection. So maybe that's, again, the sense of, it's hard to say. I mean, you got to look at this as like anything's possible, I guess, in terms of the run up. But it's not that different. It's still a decent window here. So both of those are roughly the same target. This is annoying, I know. You guys are probably really annoyed with me. What I'm doing is I'm looking at this as if it's not going to run until later, and it's just going to iterate based only on like a hard, firm understanding of like timing, meaning the S-curves are like perfect, and then backups are perfect. This is the way in which I think it would happen. So you have to look at all possibilities, and frankly, the measure from 547 here, which would work, or slightly higher than that even, at 569, which is the SOS kind of top, does give you a very convincing move based on the math that we've done in the build-up up to near that 1350s area. It doesn't get you as high as this one, but that's just because of the nature of the swing not being as high. So I think it's debatable, you know. I think it would be very easy to see either one of these. So what I'm going to do is, I don't know what I'm going to do yet. Probably need to take a break. But, yeah, I might take a break for a little bit. I've been doing like full days, and it's not good for my back and my arms and stuff. So I need to make sure I'm stretching and moving in the middle of the day, eating, staying hydrated. Hey man, this is not what I want either, but I'm just looking at it like purely mechanically. Could you do this? Yes. And could it build out much the same way as this first iteration? Yes, it could. Do I want this to happen? No. But realistically, if it just did the same thing it just did, okay, if it were to continue to do the exact same thing it's been doing here, could you justify this? Yes. And does it work? Yes. So that's all I'm saying. Am I happy that it happens to be there? No. Of course I'm not happy about that, you know? Why would I be happy about that? Do I want them to slow walk it out? No. I want to rip and go like a few 100% in a few days. But it's not really about what I want. It's just about, that's the way the chart reads if you look at it very mechanically here. So this S-curve was met with a pullback that went sideways for a considerable amount of time. The next S-curve hits a peak here on the 15th, and then presumably you would come back down. And this is where we have maybe a debate we could have about whether it always comes back to the same line or if it comes back higher. I don't know. even if you thought, well, it's just going to dip beneath this one here, which is kind of what this guy did, it's still the same. Like, it ends up being basically the same marker, at least in this case, this early move. You would have to still say, well, it's going to come back below here and chill out. That doesn't even register as a big deal to me because I'm like, okay, well, that makes sense because you're retesting a support. You're also doing a creek jump here, so going backwards on an LPS to test after that jump is not even a big deal. It's just totally normal. So it's frankly, it's very realistic, in my opinion, that could happen. And if you continue outward, things could change. You know, like I said, it could be that I'm misreading this idea of iteration. You know, you could have it be an SOS high that doesn't end up coming way back. Does it make sense to come way back? Sure. I mean, like, that's the thing is, like, when you look at this, you have to just sort of take it into consideration. Like, well, that's where the new high would be. So coming back to the creek could come pretty low, like come back down to 463, you know. So it makes sense that they could set up here and do like a spring dive, you know, if that's what they wanted to do, and chop it down into FOMC. Of course. That would be pretty straightforward. You know, and the question mark is, does that have to be the case? Well, no. I mean, it doesn't. It's just one possibility. So the rest of it's more hypothetical than anything else. But I think it's practicing a bit of a parallel Olympic here, where you're going to push up, S-curve, come back to that parallel. And the first two are very close together. So there's a strong chance that this one would have a deep pullback. And then from that point forward, if it continued to do the same thing and come back to those parallels, that's where things get really different. You know, instead of coming back to the first one, if you were to continue to build out, second, the third one is actually really high. So maybe that's the case that, hey, we don't ever come way back down. But nonetheless, it's like, why would we at this point, if we're in August, late August, if it really took this long to get out there, why would we not just do like a backup? That's kind of where I'm at. It's like, well, at this point, if it takes till the end of August here, 2 weeks to get up to 615, if it really took that long, then why wouldn't it just take its sweet fat time and come down? It just makes me feel like they would. I don't know. That's how I am. I suppose, again, by the books, if you were just doing the same thing, you just SOS. This is a really clean SOS region. And you don't have a breakdown. You just kind of go. And that's a very simple way of looking at this in terms of like legs up. A little different than what I was saying a minute ago, but oh, you keep going, Booksy, keep going. Yeah, I don't know. I guess it would be these little breakdown levels, these little hooks. That's what it looks like to me. So we could just do the next one, like right here. And just keep going, you know. This would have to be like more of a 50-50 kind of level through the middle. We don't really know. Also, some of these levels aren't going to be like, you know, perfect in terms of the I don't even know what to do about that one. There's nothing there. Maybe the middle of these two. There's not really anything there. Grasping at straws. Maybe that one. Could be. In theory, that's where supply could be, right here on that wave. So if it happened way over here, I'm just trying to imagine like where the heck I would put the... I guess it'd be underneath it. It's the same level though, so there's that possibility. I don't really see any major discrepancy. It's just time. All right, well, obviously don't want that to happen in terms of our timing. I think that would be kind of a bummer. But if we're just looking for a possible run up into August, one would be, or into any August, one would be here. This is probably where you'd have some kind of a sideways before an advancement. So maybe we're like halfway up the move or something in this particular instance. This is very different than the one I just showed like 15 minutes ago where you're like down here, really big backup. But this would be like a halfway point, and then you could run the rest of the way after FOMC, and it still gets you to the same, roughly the same targets, just late September. And it kind of satisfies more upside. What happened to all those moves that were stored up that would just explode to the upside? We will know very soon, okay? Because if this crosses above and can build out a support between 520 and 513, that's where you're going to see the magic start happening, because that to me is like the big jump. If it builds out that support there and we don't have another like dip in store for tomorrow, pre-market or whatever, if it can build out that support higher here in this confirmation zone, I think it's going to be fairly evident fairly quick. I'm just cautioning everybody right now because I'm not a huge fan of the way this is set up in terms of like the timing. The timing is slowed down significantly based on what they just did. So are we going up? Yeah, we're going up. Are we breaking out? Kind of. We're sort of double topping right now. We don't really know yet. We could easily see this as like a second horn before a drop. So just like what I said on Monday, I'll say the same thing today. It's not really worth getting excited about until this breaks out here. This could easily top off and head back down as like a head fake here. Go up to like 511 and then drop back down to 490. I hope I don't have to say that tomorrow, like, oh, I said this, you know, but that's a possibility. So right now, all it's doing is testing a creek. It seems to have found some traction off of 504, which is very positive. But I don't like the shape of it. I already kind of described that. I don't like the fact that the volume's like mostly in these tops right now. So I want to see if there's a push. I want to see volume kind of drop before the top, and then seller volume drop off the pickup, and then not go back below. If it's me and I'm setting up for a jump on Wednesday and I want to get the jump here at 511, I'm probably going to head fake to 511 now. I'm just saying. It's a possibility. Or not necessarily head fake, but I would have some kind of a significance to 511 if that's where I need to be at that FOMC or at the release of that data, or whatever, whenever it is. So you can just kind of figure it out on your own, guys. I'm not going to tell you. All I can say right now is that I'm not going to try to do that. All I can say right now is that you would have, I think this is a possible move back down to 491. I think we may see a gap even lower. I think it's possible we could come up, but we have to then show that we have support here. Those low targets are in the case of a major flush down to 465. I still think that's not off the table yet. It just depends. We don't know if the news will be great. Well, let's just see what happens, I guess. Let's see what happens. Yesterday we had some massive move like last few minutes, but honestly, like right now, I'm kind of like hesitant to watch AMC. It just feels like it's very close to any kind of a fake out would be like this sort of a motion up and then back through the creek. So if it comes back below 504 again, guys, I'm like not really feeling it. MPW is right underneath as well. It's the same thing. So it's good that they hit it and they're approaching it again. IWM doing the same thing, kind of bounced off of it, retreated a little bit. Now it's approaching it again. Same deal. Still gap below, I think. This is a bad... It's a good and bad place to be because you're really close to potential breakout, but you're also a stone's throw, not even from a pretty nasty slide. It's just like yesterday when we moved up. It was like the same deal. You're kind of right on the edge, so they're actively making that attempt to kind of come back above here, which is good because that means that resistance isn't really there so much. Probably not till we hit 511. If we can get there. Yeah, I don't know about this. This is the only thing I'm kind of... If you guys been following me for the last couple hours or whatever, just know that I don't have any real strong feelings about this timing-wise. So the rest of this is very speculative. I'm just kind of using this as a guide, what we just saw. I can't guarantee that it's going to do like that in that way. As soon as it breaks above here, it should be and there's support, there should be a strong push all the way to 560s. That changes the game, you know, because we've had trouble with 550s. To come all the way back up to 570s is going to be absolutely like one of two things, you know, and at that point you really are looking at that as, are we going to go and push resistance? And this actually goes up to 575. So I think it's very possible we could get that high move. I would prefer to not sort of stay there for a long time down here, but just in terms of a creek jump, that's pretty expected. This would be like an M cross here, and then you'd expect there to be a potential pullback. So I just don't know about timing in terms of how long that takes. So what I will say to you is that if you're somebody that's in calls for this week, if we get a push to 576, it's kind of like what happened last time here. Like, you can get a push up high, but you need to be careful, you know, because they may get squashed one more time. I'm not positive it's just going to keep flying off the shelves, you know. So looks like best bet is tomorrow, if it happens, and then I think we'll see what happens after that. Thursday and Friday may be used to cool it off a good bit. If Thursday and Friday we don't see that cool off as like a super big threat, I might change my tune about Friday or about Monday, but I think that this is so close now. It's hard to say. I mean, if I had it my way, I would just come up here and, you know, retrace just enough to get back to like 530 or something, and then push back above 550, find support, run all the way up to the top, and come back down. I mean, I would be in an SOS position definitely before Monday. I'd be up by 6, but that's just me because I'm like wanting to go, you know. But, you know, in reality, like could be quite a bit of delay in a LPS or an SOS. So it's just one of those things, you know. I'll wait it out. Hopefully it does go really fast. GME is kind of like that, where I feel like if it makes that move, it should go pretty quick. But it also would not surprise me to see it do some kind of crazy downward sideways nonsense here or there. And LPS wise, it's got a lot of levels it could kind of meet. So if you were a 1-to-1 on this, I would say AMC's already running, it's going hard, and the rest of this week it's like a 3-day run or something, or into Monday or whatever, and you're hitting like key levels all the way up. AMC should be really high, but sometimes we've seen them kind of flip-flop where all of a sudden like AMC takes a break and GME is doing its thing, and vice versa. So again, pretty annoying, but I find that to be relevant to mention. It seems a possibility to me that that's what happens. I mean, for a lot of you guys, you don't care. Up is up. You got shares or long-term leaps. I know some of you are really digging in, trying to make sure you don't lose a lot of money on a short-term bet. I can't really help you there. You know, the timing. If it delays, it delays. Both of these are bullish. It's not like one is not and the other is. Both are bullish. You know. It's just a matter of acceleration and how much is put into it, and you know, it's hard to say. Hard to say what comes from that. I mentioned that I find it to be curious, so I'm going to watch carefully and see where we hit these first big levels going into this week. I may completely change this chart by the end of the week, because if we hit certain levels in a certain way here, I'm really curious what happens at 520 and 543. At those two levels, if we do some different stuff, I might drastically change this. So assuming that we do make an upward move this week, that's what I would see as important to watch. The issue with this tiny iteration that we're watching is it's really difficult for me to gauge spatial relationships, like proportion relationships, because there's just a lot clustered together. But these should be spread out enough that we should be able to see what's effective. If it's hitting these supports and just taking off, it could really change the outcome, or the perceived outcome. September 10s. Late September, you're probably pretty safe if you think rate cuts are coming. I don't feel right now that there's a super strong case for downside. That could change very quickly, but you know, it might. It would have to if it does happen. I think it would be a very fast change of character. But yeah, I mean, if you think that AMC is going to be higher, that would be a good timing, because that would be after the rate cuts. It would be likely there would be some kind of move before then or right after then, and then who knows. I've been thinking that they're already priced in. That's why I've been thinking we go ahead and move up before, but we're not there yet, guys. Sorry. I know it's weird, but Tuesday feels kind of like another Monday. It's very similar. GME is like the only one on my chart that seems to have made some kind of a significant move. Even MPW just kind of back to where it was, you know, on the day. It's like, all right, well, we're back to the top again, you know. Percentage looks nice, but it's not really any different on the chart. Come on, GME. So this widening on RSI did return back to the top. This is not holding up again. I wouldn't say that. It's not done yet. It's close. Wednesday and Thursday. Well, there should be some inflation data tomorrow, so month over month, year over year stuff. That's going to increase or decrease the chance of a rate cut in September. So part of me wants, I know this sounds weird, but part of me kind of wants it to drop here. I feel like if it drops here, the data is expected to be more positive. I know that sounds backwards, but to some maybe, but that makes sense to me because I'm like, well, if they're thinking it's going to turn back around, then go ahead and drive back through and try to get the low, and then reverse on that news. I hate the up thrust into close. It's like my least favorite thing. Unless it's got breakaway attached to it and it's got some massive gap up following it, it just does not feel good to me. It always feels like a trap. Or just buyers coming in and triggering orders and then, you know. It's too slow. Like, if we were to go up right now to 512 or 511 and then close there after this push up with the volume dying, I'd be very hesitant. You know, I would expect some kind of drop in the morning. It's just my nature to think it's going to go opposite. Well, if it's going up on weakness, I don't really want that. All right, well, I'm not going to sit here and watch it move pennies for another hour. I've done a lot today in terms of like trying to build out maybe a more structured timing for a potential longer move if that happens. I think it gave me a very clear idea of possibility. Really didn't get anything awesome today. Maybe GME's move is the best move that we've had. Like I said, it just feels good to me to be back up trying against this resistance, and I feel okay about that right now. I don't know if it's going to last. There's a little bit of a kind of a wedge feeling here with this rise because it's kind of narrowing on the whole. That could be a little dangerous potentially, you know. Maybe a pullback if there's a need for it. Same with AMC. Maybe you see that drop here. But at this point, it's out of the creek, so a drop does not scare me as much as it did here on this push-up. Because, you know, if we came back down now, even if we came back to 2045, like we're outside. So we could have a pretty big retracement and be fine, you know, which is kind of great. I mean, it's a good place to be. 2150, I mean, like it wouldn't be that bad, you know. So in theory, like GME has put itself in a pretty decent position for any news. You got some wiggle room. I'd prefer to be above 22.32. That's why I said I think it's a stronger confirmation zone. We haven't gotten it yet, but that to me is a little bit stronger in terms of a confirmation zone. So I'm not saying it has to go down here. That's not what I'm saying. It could go up if it finds the support. But I think that there's a decent chance it's going to be based on just the news, so, and what the market does. But I like the odds here. I like this is a better position for us. And AMC is not that different. I still think this is a good place. You swing low, you're in a position for support back here. You swing high, you're potentially breaking out. Same kind of catty corner or split decision, not catty corner. Maybe the same thing for IWM. Down being like going down towards this creek, you know, retracement. It would break out to the downside if it went that way. You'd probably lose that triangular formation. And then to the upside, pretty obvious, pretty high. So hopefully it's a good day tomorrow. Sorry about the crappy day today. I keep saying the same thing, but at least tomorrow we have something to look forward to with the news. Maybe that helps propel some movement, some volume into this kind of dead market right now. And it's not dead, it's just boring. But that's okay. So, anywho, you guys have a good one. I will catch y'all tomorrow.